Good morning, everyone, and welcome to InvestorExpos show for May 14th. My name is Anna, and I'll be your host today. We are having a great lineup of 4 speakers for you. Andrew Keene, Todd Horwitz, Larry Gaines, and Adrian Slack. Let's begin and bring to the show our first guest, Andrew Keene.
All right, so let's get started here. How's everybody doing today? Hopefully you guys are having a great day. My trading today is on fire. I'm up worth of $3,000 here, and I'll show you guys how I trade. The way I trade is a very unique strategy. It's called institutional order flow in the option market, otherwise known as unusual option activity. So I'm watching for the biggest and best traders in the world to place and allocate capital on certain trades, and then I mimic their positions into these trades. And that's how I trade. That's how I've been trading for a very long time. So let's get started here. This is Hidden Market Revealed, Wall Street's Secret Trades. And I wanted to go to share my questions up. Okay, we are good. I'll be presenting here for about the next hour here because I'm going to show you something today, my biggest secret, a secret that has helped me make over $4 million trading simple options. I call them unusual option activity because few people know they exist. Even fewer know how to find them. But these trades take place every single day and generate billions of dollars in profits. Best of all, I'm going to show you how you can put these on too in your account. So you can see here, this is my account. You can see my P&L here. Today, I'm up $3,340. This morning, I was down 500 bucks. How do I do it? And I'm going to teach you guys how I do it today. Institutional order flow in the option market. Before we do that, I have to put a little risk disclaimer in here. Day trading, short-term trading, option trading is an extremely risky undertaking. They are generally not appropriate for someone with little to no capital, low trading experience. It involves serious risk. When you trade options, you can lose all your money. Keep that in mind. That is important. Okay. When you buy an option, the most you can lose is when you pay for the option. But keep that in mind here that I'm not a registered investment advisor. I cannot give recommendations or advice. What I can do is offer you my opinion, which obviously I think is much more valuable. So this is an unusual option activity trade in Hain Celestial. To me, and probably most of you, this doesn't mean a damn thing. Might as well be written in Latin. But to a trained professional, it reveals unusual option activity in the option market. In this case, a massive long position in Hain stock. Today, I'm going to show you how I use this very code to make 321% gains in 17 days, turning every $10,000 into $42,100. One trade, 2 weeks, $32,000 in profit. Imagine finding a quick trade like this just once a month. That would add up to $385,000 in pure profits. And you can find these opportunities every single day. I've been a professional trader since 2003. So when I talk, people listen. I've made regular guest appearances on CNBC, Bloomberg, other financial media outlets. Even co-hosted the show on Bloomberg and Fox Business. Today, I'm the president and founder of Alpha Shark Trading. I've also written 4 books, including How to Trade Like a Hedge Fund Manager and the New Wave of Trading. Today, I'm one of the most sought after real-time option traders there are. And I'm so excited to be here today, and I can't wait to share what I have. Now, before we get started, we have just some quick house cleaning. There's a chat box at the bottom of your screen where you can type any questions and comments. But do me a favor, try to hold these to the end of the presentation. I'm going to stay around for a live Q&A and make sure all your questions are answered. I'd also suggest shutting down Facebook, Skype, YouTube, or anything else that could slow down your internet and cause issues viewing this webinar. Because if you miss something, you're not going to be able to go back and see it again. Just want to see what Netflix is killing me. I know your time is valuable, and I don't believe in wasting it. So let's go ahead and get started. I want to thank everybody for taking time out of their day to learn something new. So let's get started with the example I just showed you. Now, this code looks complex, but it's actually pretty straightforward. What this shows is a huge option trade in Hain Celestial stock, a stealth trade. It's a little bit easier to see on the chart, so let's have a look. See where unusual option activity took place. This chart shows a large amount of money going into Hain, completely out of nowhere. Now, let's overlay that with price action. The black chart represents the unusual option activity. The blue shows the option change in price. As we can see, after the unusual option activity was placed, the option shot up. In this case, 321% in about 17 days. But this is an important part. It jumped after the unusual option activity took place. This gives you plenty of time to place the trade in your account and maximize your potential profits. Following the unusual option activity in Hain, it would have given you the chance to make 321% in 17 days, turning every $1,000 invested into $4,200. And it's so easy to do. You just need to find and decode these unusual option activity trades. Here's another example. On January 18th, I spotted a huge unusual option activity trade in GameStop. You can see where you get the spike on the chart. If you knew about this, you could have placed a very simple option trade on GME, then walked away with 360% profit in 13 days. And look, this isn't hindsight. This isn't some backtesting BS. This was an actual alert I sent to subscribers. In at 50 cents, out at $2.30, turning every $5,000 into $23,000 in about 2 weeks. Not bad, right? Here's another one in Citigroup. There's unusual option activity in mid-February. And less than a month later, my subscribers were able to capture an easy 495% gain just from following the unusual option activity trades. Guys, I've been trading this strategy for over 16 years. I've tried, tested, retested every aspect of it. Throughout the process, I've discovered 3 signals that led to the biggest moves. The ones that can hand you 300%, 500%, even 1,400% gains in as little as 2 days. Today, I'm going to show you what these signals are, how I use them, and why I believe this is the only way. Just making some more money over here. Sorry about that. Why I believe this is the only way to make money as a trader. But first, let me tell you who I am and why you're listening to me. Again, my name is Andrew Keene, and I'm a professional trader. I earned a finance degree from the University of Illinois Champaign-Urbana. And after graduation, I went on a lot of job interviews. Everything from financial analyst to investment banker. One firm was even offering me a huge salary. Now, I was a 21-year-old kid fresh out of school. This was a big opportunity. I was excited, and I was about to accept the position. But I decided to go on one last interview. It was with a trading firm. And after a few minutes, I knew this is exactly what I wanted to do. Everything was about probability and math, and it made so much sense to me. So I took an entry-level position as a clerk. I was making $2,000 a month and taking the 5:42 a.m. trade every single morning from Deerfield to Union Station in Chicago. My mom wasn't really excited about my decision. You can see why. But I was passionate about trading and I loved the markets. And after 9 months of long hours and low pay as a clerk, I was finally given the opportunity to start trading. That's me back in the pits in 2003. The first year, I made a good amount of money. The next year, I did even better. Year 3, same thing. I felt like everything had finally fallen into place. Eventually, I was making so much money that I got cocky. I thought I couldn't lose. Then, one day, the inevitable happened. I lost over $494,000 in AMAG, and I blew out my account. Now, I don't know how many of you have ever lost $500,000 in one trade. Well, let me tell you, it stings a little, okay? More than that, it was embarrassing. My coworkers, my friends, my family, They thought I was this big hotshot successful trader. And now, with one stupid trade, I had lost everything. I ran away from my problems. Probably wasn't the most mature decision that I ever made. I literally moved to Thailand and started teaching English in a Buddhist monastery. While I was there, I licked my wounds and made peace with my losses. And most importantly, I developed a plan to never let this happen ever again. So I came home with the last $100,000 to my name and went back to the trading floor. I remember there's this Merrill Lynch broker, H-E-S, Hess. One day, this guy comes into the pit and sells 10,000 Apple credit put spreads. We had no idea it was on the other side of the trade, but he was betting a lot of money that Apple stock was going to go up. Sure enough, it did. Next week, same thing happens. Right after this broker gets long, the stock shoots up. This continued to happen week after week after week. I said to myself, wow, this guy's pretty damn smart. Every time he gets long Apple, the stock shoots up. So for 2 years, I followed his trades. When he bought, I bought. When he sold, I sold. That's it. No technical analysis, no chart reading. Nothing. I made close to $1 million just from piggybacking this one trader. So I started doing the same thing with other big traders. And in less than 2 years, I turned my last $50,000 into $5 million. The strategy I use from the trading pits is the exact same one I use today. Only difference is I can do it from anywhere. Excuse me. You don't need to see it on the exchange floor or 7-figure account to see what big money is doing. All you need is a laptop and an internet connection. Everything is electronic today. We have instant access to order flow. I use an advanced piece of software that scans the order flow electronically to find the most high probable unusual option activity trades. The same ones I use in the pits to make almost $5 million. And it now takes less than an hour a day. And it's a hell of a lot easier than watching hand signals across the trading floor. Let me show you another example. This was an unusual option activity trade in DKS from Mark. You can see the spike in activity when a trader bought 2,450 call options one morning. 99% of investors didn't see this happen. They had no idea what was going on. But with the special scanning software like I use, you could have seen this opportunity early and made 433% profit in just 3 days. A small $1,000 position would have turned into $5,330 in less than a week. Again, just from following under the radar, unusual option activity trades. It couldn't have been any easier. Let's look at a chart of Papa John's. Ooh. At the time, the stock was down 50% in 3 months. There's no indicator on the planet that would have told you to buy them, unless you're watching for unusual option activity trade. They would have alerted you to buy calls in Papa John's when the stock was trading at its lows, when the options were dirt cheap. The stock began to rise the very next day, and traders who got in when they saw the unusual option activity trade took home an easy 608% gains. But here's the best thing about taking these types of trading. I don't know what's going on with me. And the reason I've been using it for 16 years, it works in a bullish and bearish market. Here's a short trade you could have taken in Citigroup. After worse than expected earnings, the stock fell from 81 to 71. But right before that happened, an unusual option activity trade revealed a massive bearish position when a top trader bought 4,502 out of the money March 74.5 puts. There's the spike you see on the chart. As you know, put options go up when the underlying stock goes down. And as expected, that's exactly what happened. Anybody could have followed this trade and bagged 505% gains in just 2 weeks. It was the same with US Steel. Right after the stock made new highs, an unusual option activity trade, warrant is about to reverse. To profit from this, all you had to do was buy the exact same put options, then watch them grow 750% over the next 8 days. These 4 trades would have handed you a total gain of 2,228%, enough to turn $1,000 into $23,000, $5,000 into $15,000, $115,000, and $10,000 into incredible $230,000. And from following the smart money and piggybacking the simple, unusual option activity trades. I'm just making more money, sorry. Every time you hear a little click, that's just me selling profits. This is a signal I saw this morning in MT, 280 bucks. Boom, just like that. Now my P&L for the day is up $3,600. Not hard. Hopefully you're beginning to see the power of this strategy and why I believe it is the only way for retail traders to make money. In a few minutes, I'm going to show you an unusual option activity trade I spotted this morning. And I'll give you the details so you can put it on right now. But first, I need to tell you more about the unusual option activity market and how it predicts with such great accuracy which way a stock is going to move. So here's how it works. Most retail traders buy 5 or 10 contracts at a time. 20 would be a big trade. So if you're buying 5 or 10,000 contracts, odds are you're a big deal. You know what you're doing. You're not going to last very long if you make $1 million bets and lose. You'd be out of money and a job real quick. So when someone buys 5,000 contracts, odds are he's an institutional trader at a big firm like Merrill or Goldman. He would be trading on firm capital. He would have a long track record of making money. This person would have access to valuable information, things like buyout rumors, earnings leaks, and other market-making moves. In other words, this is the kind of trader any of us would give anything to shadow, to look over his or her shoulders as they trade. By monitoring the unusual option activity trades, this is exactly what we're doing. The financial world knows the power of these abnormal, unusual option activity trades. Articles have been published on Wall Street Journal, Fidelity, Zacks, Market Watch, and TheStreet.com. I've even seen my trades featured on CNBC. Here's one in FireEye last year. After my software flagged an unusual option activity trade for 5,030 contracts, I followed suit and bought the September 15th call option. Later that day, Pete Najarian talked about it on air, but by that time it was too late. The stock had already moved, and I made over $7,000 in less than 3 hours. This one was no different than any of the others. By scanning the institutional order flow, I software flagged the unusual option activity trade the moment it filled, causing the big spike you can see on the chart in the black. Then, over the next several hours, the price rose, allowing me to pocket $7,000. I did the same thing in electronic arts to make $3,000 in a day, $3,700 in Alcoa, $3,984 in McDonald's, $5,956 in MT. Last year, I made over $31,000 just from one trade in C&Q and $14,400 on GameStop this year. And you're probably thinking to yourself, well, he's tried trading $1 million accounts. I couldn't make these trades. You're wrong. You can see my account balance here, $58,185. Anybody can do this, even small account traders. This is a simple $25,000 cash account I opened to show my subscribers what they could do by following the simple strategy. I was able to make $11,665 in profits in 6 weeks, just from following the unusual option activity trades. Now look, don't get me wrong, not every single trade is going to be a winner. I need to give more Netflix here. Sorry, 1 second. Not every trade will be a winner. Some trades just won't work out. This is trading after all. But with this strategy, your winners will far outweigh your losers, because the unusual option activity trades I follow are designed to make money. They're carefully crafted to get Wall Street firms in early before the big move happens in the underlying stock. It works like this. An institutional trader places a large trade that a stock is going to go higher. Once the unusual option activity is complete, the firm uses every trick in the book to drive the price higher. Brokers push the stock to clients. Mutual funds take positions and drive it higher in volume. Market makers bid up the shares on exchange. Firms release upgrades and buy recommendations. Firms release positive stories in financial media. In other words, the Wall Street machine goes to work. How do you think it's possible that Goldman Sachs made money on 236 of 251 trading days? But that's the real beauty of the strategy, because now you can take advantage of it on your own. All you have to do is get in when unusual option activity takes place, then sit back and watch the price go higher. The evidence is overwhelming. A leading financial firm concluded that these dark trades, or unusual option activity trades, have a profound impact on stock price. Buying can send the stock higher. Selling can send it lower. NASDAQ.com reported that, quote unquote, very few things can move a stock more than unusual option activity trades. A research firm at IBD found that the unusual option activity trades are what reveals what fund managers and other large investors are doing at critical moments. Unusual option activity trades have been perhaps to be the #1 predictor for stocks to make about a big move. Moves that give traders the ability to make quick returns in the option market, even if they have a small account. This is how my subscribers were able to make $3,150 in Target calls, $4,020 in 4 days of McDonald's calls, and $1,980 in 1 day in USB calls. Now, at the beginning of the webinar, I promised to show you 3 secrets I've used to make almost $5 million trading options. The first is the unusual option activity trades, which I've been talking about, which by themselves can make you a lot of money. But as a trader, I'm always finding ways to be more accurate, more predictable, make more money. So I did a study. I analyzed my trading history over the last 16 years. The entire time I've been using the unusual option activity trades. I analyzed what trades worked, what trades didn't. And I found that certain conditions led to an even higher win rate. These same conditions led to my biggest gains, trades where I was able to make 10 or 20 times my money in a short period of time. After I've identified strong unusual option activity trades, the next thing I look at is price. Statistically, cheaper options are best. Those priced between 20 and 80 cents or $20 to $80 per one lot will give you the best bang for your buck. These are out of the money options. They're cheap because the odds of them falling off are very low. But this means when the stock moves even a little bit in your direction, those odds go up substantially. So does the value of the option. So let's look at an example. This is Walmart from last year, one of the most boring stocks there are. It went from 93 to 100. Nothing too excited. During that time, the in the money 90 call went from $7.25 to $14. A gain of 93%. But the cheaper out of the money 105 call went from 50 cents to $2.45, a gain of 390%. Same underlying stock, same time period. But the lower cost option made 4 times the return. Here's why it's important. Imagine you're investing $3,000 in this trade. At $725 a piece, you could have bought 4 of the 90 calls, turning your initial $3,000 into $5,700. Or you could have bought 60 of the cheaper 105 calls, turning the same $3,000 into $14,700. Easy choice, right? And this is huge for small account traders. If you only have a few $1,000s in your account, a $725 call is going to tie up a lot of capital. But with a $50 option, you're only risking a small piece of the pie. Does this make sense to everybody? So that's criteria 2. I want cheap price, preferably between 20 and 80 cents. The third thing I look at is delta. Delta is the measure of how much an option price moves in relationship to underlying stock. Higher delta options move more, but lower as a percentage. Lower delta options move less, but higher as a percentage. The sweet spot is a delta between 15 and 45. That's where you get the best results. Big, cheap trades on cheap options with a good delta. That's the magic formula. So here's how I use it as a trader. Every morning I scan over 4,199 stocks for unusual option activity. This finds me 10 to 12 good trades of the day. Then I filter down that list of 10 to 12 to find the ones that meet my criteria field and have a delta in the range that I'm looking for. After looking at the charts, checking the news, analyzing the profitability for each one, I'm able to isolate one best trade of the day. Those are the ones I send to my subscribers. Fine tuning the unusual option activities like this helps me find winners like Melco, which returned 300% in 9 days, or 400% in 13 days in CNQ. But big winners like 800% in Alibaba in 2 days, and 1,400% in 5 days in Google. These are the kind of wins that can make huge impact on your trading and quickly grow your account. Look, I know the struggles of being a trader. I know what it's like to see a stock taking off, not wanting to miss the move, then getting it in before it goes the other direction. You get into a trade, you get stopped out, then you watch the thing go out and you're no longer in, especially if you're trading a small account and looking for those first big wins you need to build your trading account. It's frustrating as hell. I work with thousands of traders every single day. Many have spent tens of thousands, if not hundreds of thousands of dollars on courses, chat rooms, but still can't get profitable. The problem is they've wasted time and money listening to wannabe gurus that like to use useless generic advice. Things like let your winners run, cut your losers short, trade with the trend. I mean, give me a break. It's BS. 99% of these traders have never traded for a living, and I guarantee they won't open up their account and show you their P&L. The truth is, all the money management in the world won't make these people profitable. It just won't. No magic indicator or gimmickly slogan is going to make you successful. What traders need is clear, concise trades that actually make you money. Period. The only thing I've seen get people over the hump and start trading profitably. Many of my subscribers are finally making money after years and years of struggling in the market. I got this the other day. That trade cost him $850, and he turned it into $2,200. Lance was able to make $1,600 in GameStop. Dave more than doubled his account over the weekend when the market wasn't even open. Small account traders have been doing just as well. Jay made 137% in 3 weeks. Gerald sent me this not long after joining. These people are no different than you. They're not smarter or luckier or more experienced. They're just getting their ideas from a better source. Wall Street's top institutional traders. It's like fishing from a stocked pond. There is nothing stopping you from doing the same and achieving the same success. All you need to do is find the unusual option activity trades. This is how you're going to find tomorrow's winners today before they start moving. Trades like this in Macy's. After seeing unusual option activity, we saw a trader buy 2,650 contracts. I sent alert to buy the April 5th. 25.5 calls. Subscribers were able to triple their money in less than a week. Here's Regions Bank. There is a large buyer of the April 15 calls on Monday morning. 5 days later, traders could close this out for 300% profit. And if you miss a trade, don't worry, because if you miss Macy's and Regions, the next week you could have picked up XLF for 300% and 400% in 3 days in Western Digital. I've been beta testing my alert service to a small group of traders, and the results have been outstanding. Steven quadrupled his money in 2 days on unusual option activity trade in AMD. David took one of my trades right before the market closed on Friday. He closed it out Monday morning and made 250% profit. Steven did even better. We got him in at $3.51, out at $19. Think about that for a second. He bought the TTD August 105 calls for $3.51 or $351 per 1 month. He sold them for $1,900 per contract. Even if he did a 5 lot, that's a profit of $7,745 in just one trade. So let me tell you more about the alert service. I've been working on a project to alert folks of these opportunities. It's called the biggest trading room in the world. So I've been running the trading room for 9.5 years. We have partnered with a company on the East Coast, and we now have over 3,000 paid subscribers in the live trading room. They watch me trade live, and I can just see now my P&L is going lower. I'll always show you win, lose, or draw my P&L. You can see here, now I'm only at $1,500. And I'll show you the institutional order flow in real time live. All you need is 1 hour a day, 4 days a week. That's all I'm in the room, and then I go about my day. I spend more time at the gym than I do actually trading, and I've made millions of dollars of trading. I spend more time learning this thing called golf than I do trading. I spend more time at the dog park than I actually do trading. So what I'm doing is we're offering all new members the chance to make 500% return in 1 year. But before we do, let's talk about rolling your profits, assuming they fell one after another after another. So let's say you started with $1,000 and you took the put that I recommended in US Steel. You then rolled that money into the Google trade. It would have turned from 1,000 to 8,750, 8,750 into $131,250. Finally, you would have invested in the 2-day trade in Alibaba. Your account would have ballooned to $1,181,250. $1,000 to $1 million. That's more than 1,100 times your initial investment. Now look, this is obviously a hypothetical example. There is risk anytime you put any money in the market, but even a fraction of this would change your life forever. The bigger point I'm trying to make here is following the unusual option activity trades and getting in early alongside Wall Street's top traders is the easiest way to make big, consistent money in the market. I like these. I'm going to give you a trade right now if you want to put on a trade. These are the GM June 19th, 2020, 24 calls for 70 cents. You can use the stop loss here, guys. So here's a trade I just spotted in real time live. Stop loss is 35. So you can get this trade for $70 per one. So here it is. I put money on the line on a lot of these trades. That's how much I believe the strategy is going to work. and I want to do everything to make sure you succeed, even if you're brand new to trading. So what we are offering today, and I have plenty of time to answer plenty of questions. I want to show you my profit and loss for the day as well. This is, now we have 3,000 members. So let me just change this here. We are offering the biggest live trading room in the world. 12-month subscription, okay? If you go out, I know because my brother has his MBA, and if you want to get your MBA, your Master's of Business Administration, so your MBA is going to cost you about $85,000 a year, okay? My brother is one of the smartest people I know. He has all 3 CFAs, his CPA, and his MBA from a top school. I make probably 5 times more than he does. And I don't have any of those. So if you get your MBA, it's $85,000. If you want to get your undergrad's going to cost you about $55,000. Okay. You don't need to be in school. The person that backed me on the trading floor, he definitely did not graduate college. I don't even know if he went to college. So let's say you wanted to come and get your MBA. Your MBA is going to cost you 3 years. Your undergrad's going to give you 4 years. 220, you're looking at $500,000. $500,000 to get a degree or 2 degrees. You know how much more money I make than my brother? 5 times. And he's older than me too, which is not as good. So what we're offering you guys today, and we will sell out at this price point. We haven't offered this price point this low all year long. You're going to get 12 months of the live trading room. There are over 3,000 paid members of the trading room. We're going to give you once a month VIP group mentoring sessions. So come in there and I'll help answer any questions you have as a trader. You can ask how to set up your charts. You can ask, what positions to put on, what not to put on. And we're going to go look at some charts as well here. We're going to give you 2 more hours of a bonus trading room. This trading room is with my 2 other moderators. They run the room when I'm not there. Also, we're going to give you an unusual option activity master course. We have, I think, 19 educational courses, and out of the 19 educational courses, this is our #1 bestseller. If you cannot make it to the room, I understand a lot of you guys have jobs. We will send you every trade over the next year via text and email. There's over 200 trades, okay, and a lot of them. Let me just show you one from today. This is a signal I sent to the subscribers, okay? There is a big buyer in KRE calls. So this is the regional banking ETF. Let me just show you the signal. So I'll show you the signal on my scanner. So KRE. Okay. So some trader somewhere in the world, we have no idea who he is or what his position is. They came in here, right here, guys, and they bought. That's actually. Oh. Let me see. Might not be able to find it on here. Okay, so look at these guys. They came in here and aggressively bought the KRE May 29th, 35 calls. They paid 30, they paid 34, they paid 35. So say about 33 cents an hour. This is something that I said to my subscribers. I said, hey, buy the KRE May 29th, 35 calls for 30 cents. Okay, you can see here on my order, and we'll do it alphabetically. So KRE, I told my subscribers to buy this contract, KRE. So you can see here, and I'm in Pacific time zone. May 14th this year, today, literally today, guys, buy KRE, 35 calls for 29 cents. So you could have got into that trade for $29 per 1 lot. Profit targets on this trade were 45 and 60. And let's just say you took a 10 lot. Okay, 10 lot, you had $290 of risk. This is a trade from today, guys, timestamp and dated. So these went from 29 cents to 45 and then to 60. Okay, as you can see, I got filled here to sell these at 60. So I bought them at 29, sold them at 45 and 60. If you're looking for Forex trading, this is not for you. Okay, this is trading in options and stock, day trading and swing trading. So you could have got in this trade for 29, sold them at 45 and 60. If you just did a 10 lot, guys, you made $230. You know how long that $230 took? As you can see my timestamp and my dates, my time. That trade took, let's see the buy, less than an hour. Less than an hour, 100% profits, guys. You're never going to get this anywhere else. And this is why people trade options. Okay. The only way to make 100% profit is trading penny stocks, and I do not trade penny stocks. 29 cents to 60. This is just one signal you could have got if you were a member of the live trading room, which we do every single day, 4 days a week. 5-day money back guarantee. If you purchase today, when you purchase today, we'll give you 5 days. You can try out all next week for free. If you're not happy, if you're not making money, you can just cancel it. No problem. Okay. So I give you the 5 days to kind of check it out and try it for free. 500% ROI guarantee. We track all the trades. Okay. If the trades in 1 year do not make 500%, I'll give you year 2 100% too, free. So if the trades we track, we cannot pay for losses of capital, we cannot pay for commissions. If the trades we track do not make 500% in a year of what you pay for the program, we'll give you year 2 100% free. So let's go to the offer, guys. We're going to sell quick. I'll announce your name as you purchase it. So these are all bonuses. Bonus. 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 Bonus and bonus. Okay. So welcome to the largest trading room in the world. This is everything you're going to get when you sign up today. You're going to get 12 months of the largest trading room in the world. We have over 3,000 paid subscribers. You're going to get a bonus trading room, which has 2 more hours. Once a month, VIP group entry. These mentoring sessions are small, so if you have any specific questions, just ask these in the mentoring questions. And, I don't have, some people like delegate their mentoring to other people or their courses to other people. Guys, I'm a one-man band. I do all the mentoring sessions myself. I'll never give you somebody else. I'll give you myself because I think it's most valuable to learn from me. Master course. So we sold 19 educational courses. We've sold over 10,000 educational courses. This is our #1 selling course. Swing trades. If you cannot make it in the trading room, they're buying more KSS calls. So they've just aggressively been buying KSS calls, guys. Every day they buy KSS calls. 5-day personal money back guarantee. If you try out the room lap next week and you don't like it, I'll just give you your money back, no questions asked. Total value is $16,479. And we sold all these for this price. We sell the master course on the website for $1,000. Obviously, we're doing a webinar, so we're going to offer you a great promo price. We're going to try to charge you $2,495. But we're only offering 25 spots of this. And we're going to offer it to you today for only $1,000, guys. The link is alphasharp.com/Jack. We only have 25 spots available. I'm assuming we're going to sell off. You get 1 whole year, guys. This is a 1-year program. Okay, you won't be billed again for a whole year. If you break this down, it's about $80 a month, which is about less than $3 a day. I know if I get a coffee, it's about $4. This is the lowest price we've ever had. Congratulations, new member Meg. Congratulations, new member Harrison. Just reading off names, I get them in my inbox. Congratulations, new member John. Congratulations, new member Brenna. Congratulations, new member Cameron. So this is everything you guys get. This is the lowest price we've ever offered it. 12 months of the largest trading. Just look today, guys. If you were in the room today and you had every position on the same as me, you had every position on the same as me, you'd be up $1,400 today. You would have paid for the trading room in one day. Okay, if you have every same position on as me today, and we do all the trading live. Okay, there's nothing, anything else. We do all these, and if you miss a session, we record all the sessions and get back to you. Okay, so we'll put all these sessions out. We'll give you every single recorded session. So this is a one-year program, guys. There's no reason not to sign up. You're gonna get 12 months of the biggest trading room in the world. 3,000 paid subscribers in this trading room. You're gonna get 2 more hours on a bonus session. Once a month, VIP group mentoring. Like I said, that's always with myself. You're gonna get the master course. This is everything I've learned in the 19 years I've been trading. You're gonna get swing trades via text. 5-day personal money back guarantee, guys. And don't think of it as, oh my God, it's $1,000, it's so much. You're gonna get me as your personal coach, your personal guide for the next year. Look at this, guys. If you just had the same trades as me today, and this isn't just winners. I mean, Netflix, I'm down $1,700. This is winners and losers. You'd be up $1,430. Do we have to trade in the market open because we're on the West Coast? I'm actually in the West Coast too, yeah. So the market opens at 6:30. I get up at 5:30 every morning and start doing my research for you guys while you're probably sleeping. So the room opens at 6:30 every day. It's open from 6:30 to 7:30. And then we have a bonus room that's open from 7:30 to 9:30. So you're actually gonna get 3 hours of trading with 3 different moderators. I run the first hour of the day in the trading room, 3,000 paid subscribers. You're never, ever gonna get a better value than this. What percentage of trades are winners or losers? So let me show you guys something here. We started tracking the trades. We're about a 65% win rate, but it doesn't really matter what the win rate is. What matters is, this is every single trade that we put on since September 5th, 18. So about a year and a half. Okay, we started this portfolio with a $5,000 cash account. So $5,000 cash account, every trade. Look at that, winner. Yeah, there'll be losers. There's gonna be losers. If you fast forward a year and a half, $5,000 would have turned into $35,000 of profit. I repeat, $5,000 would have turned into $35,000 of profits. You would have over $40,000 in your account if you took every trade, 1 trade a day that we put out. Okay, $5,000 cash account would turn to $35,000. Based on what you pay for the program, you're going to pay $1,000 for the program right now for a year, guys. You'd be up 3,589%. And remember, guys, I can repeat a lot. I'm not a registered investment advisor, cannot give recommendations or advice. Everything is my opinion only, but this is how it is. So we are 58% win rate. But it doesn't matter what our win rate is, because we try to win huge on the winners. Etsy up 1,800, Nordstrom lost 400. XBI made 1,500, and then BP lost 500. So the winners are going to outpace the losers because we always get a better return on our winners versus our losers. Okay, so 5,000 into 36,000. Okay, thank you so much.
Okay, what's up, everybody? Welcome aboard, and it's great to be here with you this morning. And thanks to Anna and the group. It's always fun to present. Okay, now you see 5 screens. Okay, is that still accurate, or are you only seeing 1? I'm not sure, but okay, whatever. We'll deal with it. But in the meantime, so we talk about micro and mini futures, and I call them the next big thing. I think that overall, a lot of the trading and investing world are moving towards the futures world, and at the end of the day, okay, you look at where can the individual get the biggest benefit with the least amount of trouble and the least amount of issues. And of course, I believe from being a a futures trader and an options trader. I mean, I started out as an options trader, but 40 years ago. But again, I believe that we get the greatest opportunities when we see apparent things show that are great. And I think this is one of the things that are phenomenal for the individual. So we do call it the next big thing. And we talk a lot about emotions and things. And of course, the first thing is always the disclaimer of saying that, again, there are always risks. Okay. Now I'm going to show you live account and I'm going to show you live trading as of today. So you'll see exactly where we stand. But again, there's always risk. And you'll hear me talk about that throughout the presentation about drawdowns, because that is part of this business. Okay. Now, just myself, I've been a 40-year member of all these Chicago exchanges. Okay. I started out at the CBOE in 1980. And I'm now a member of the CME, or the Board of Trade. They're both the same now. I founded Bubba Trading. I've been the author of 2 books on options, and I have one on futures coming out shortly. And I regularly contribute to Fox, CNBC, RFD, Yahoo, Cheddar, Kitco, and the others. And every recommendation you see today is in my account, and it's a live account that is mine. And of course, we want to make sure that we are doing the right thing for everybody. And what I always say is there ain't no free lunch, right? I'm a Chicago kid I'm a street kid from Chicago. So when you're trading or you're investing, nobody's got nothing for nothing. Okay, it's straight out. That's a quote right from Milton Friedman, an economist. But again, there's always some risk in whatever you do, and you've got to be willing to take it, because there is no secrets in this business. You just got to follow the rules. All right, and I go back to the days of, if you've ever heard the name of Richard Dennis, the Turtle Traders. Richard and I traded together in the 80s, okay, on the CBOE. So if you've ever, again, that's what we're using. We're using a trend trading model, just like the Turtles, okay? I think we've actually developed a little bit better, but it doesn't matter. It works, and that's all we really care about at the end of the day. Does what we do work? And this works, and it's not a secret. It's a straight algorithm, which takes hopefully all your emotions out of this business. And, but again, I say this now, and so you remember, right, there's always going to be drawdowns. There is no way to prevent a market or a portfolio from having a drawdown. The question is, how do you handle the drawdowns and what do you do with them? Okay. And can you keep your emotions in check and follow rules to make sure that you're able to stay there? Because one thing I know for sure, with all the training, and again, we trained clerks. I had clerks that worked for me that wanted to be traders. Nobody comes with the idea that I want to just be a clerk. They came to be traders. We've done it all. We've had plenty of people over the years. And I know one thing for sure, okay, that if you can take care of yourself, the magic to be good is inside you, okay? And that's always the biggest flaw in traders and investors, is the emotional unbalance that they feel sometimes, and they force themselves to do things that are incorrect at the wrong time, all right? Now, micro E-mini futures take off, and we call them the next big thing. Why? Because again, they've done a lot of great things here, and they've now lowered the barrier to entry to anybody who wants to trade futures. Many of us were afraid, years and years ago. Now I've traded futures for 40 years, but they've been afraid to enter, getting a load of soybeans delivered in your front yard, any number of things that can happen. And of course, that is no longer the case. And of course, now we're trading a product, a contract that is 1/10 the size of the big contracts, which now brings them right into the classification of options. So when we look at these, the opportunities are simple. Okay, you can trade with a much smaller account size. We actually have portfolios that start out at $5,000, and that $5,000 has like about 3.5 times the margin needed to trade. So again, we're very cash conscious and very money oriented here, so that we understand exactly what everybody's going through. But again, you can use micros and minis as a part of a hedging program. But again, these are great ways to trade, and they do mix into the bigger products as well. So as you get bigger, as you get better, as you make money, you start to roll yourself up into the bigger contracts, which is always our goal. One of our big goals here at Bubba Trading is to have organic growth, okay? Because there are times we will press our portfolios, and I will show you how that works as well. Now, again, basically what we're talking about is a straight probability model, Okay, that is what it comes down to, is we are trading straight probabilities. We're trading the law of large numbers. We're trading what our methods have had as a win rate over the years. So again, everything is very scientific. There is no human emotion or opinion in anything that we do. It's basically 100% by the numbers. There is no other things to think about, because if you follow that and you go by the numbers, then you can just simply trade what it is. And that's all we want to do. We do not want to be emotional. We don't want to get anything else. We just want to play a straight probability model. Very much is what some of you may do if you play some of the great games in life, which are poker, gin, backgammon, and bridge. The better player will always win eventually. They won't win every time, but they'll always have the higher percentage win rate to keep them in the game and to help them master the game. Now, in mechanical trading, which is what we're going to do, okay, the major reason traders lose money is in the long run is because they miss trades, let losses run, and they're in and they take profits far too early. It's a big problem with many. We don't do anything until our algorithm changes, okay? So many of you in the past, I'm sure, have taken a trade that you intended to be an investment, and it made a little bit of money right away. You took the money and turned it into a trade. You took what you thought was going to be a trade and it lost, so you said, well, hold it, it'll be long-term, it'll come back. That's not the way that you're supposed to be doing business. That's not the way that you trade. You have to have a model that you're going to follow without fail, okay? Decision-making under the heat of the moment is never good. My method has none of the three, therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run. We always let profits run. That is because the algorithm was designed to do exactly those three things. Now, in trend trading, price is everything. I don't care what market it is. It doesn't matter to me. I can look at any chart and tell you what I think. I don't care what the chart is. I don't look at the news, because if you trade the news, you lose. You have no chance to trade and beat the news because it's already expected. It's already priced into most markets. You buy it when it breaks out, you sell it when the trend changes, okay? You don't get out before a trend changes. And we are always in the market every day of the year. We are in the products that are in each portfolio. We are in either long or short every single day without fail, okay? We stick to the system. Again, it's a math-based system. It's more scientific than it is trading. The algorithm was built from guys with 120 years worth of trading experience that understood every concept of the markets. So success, I mean, what we want? We want long-term profitability. We know that day to day, anything can happen, okay? But we have the biggest edge by following the trend and keeping ourselves available and in the market at all times. Because we know one thing for sure, markets never announce themselves or what they're going to do. So it's easier to just be in and not have to worry about it as long as you're following the trend and you're putting yourself in the highest probability position to succeed. Now, algorithmic trading, which is exactly what we're going to talk about. So our objectives, okay, our managed futures, it's the math, the portfolios, how you can take advantage, and of course, I will always answer all of your questions. Our components, the system, markets, it doesn't matter, but we do build markets so that we build portfolios that are balanced so that if one is going up, one is going down, again, our job is to always manage our risk, okay? Position size, that's the number of contracts you're going to start with. Now, in some of my portfolios personally, which you'll see a couple of them, I've got 2 lots, some are 3 lots, I've got some are 10 lots. Again, I personally have 7 different futures portfolios that I trade, okay? Entry, when to buy, when to sell, stops, when to close, and exit and reverse. All that information is provided to you. I could trade without knowing the name of the market. That's Richard does. That's my buddy. And of course, again, the reason is because what are you following? You're following price. That's all. Again, if we go back to the beginning, it's only price. Only thing you care about is price, because price will tell you what is the most likely to happen next, okay? Rule-based, why do professional traders use rule-based systems? Because they work. because they take out that grinding emotion when you're getting hammered on something and you go, is it time to get out? Is it time to get out? And again, it's easier to let a model tell you when to get in and when to go out. It's the same as you're now very heavily advertised a lot now, the quant systems and those things. It's much easier to have rules to determine when you exit, when you enter, and not have to deal with the minutia of using your own personal opinion, including mine. Now, I have a pretty damn good opinion. I do the news, I do stuff all the time, but at the end of the day, nobody can tell you what the next macroeconomic trend is going to be. I mean, in all fact, right now, and you'll see it shortly, but I had the longest futures position I've had on in my career right now. Okay, and I believe deep down that we haven't seen the lows of this market, but again, that does not affect where we are in the trend right now. And that's the important thing to remember. I don't care about what I think about 6 months from now. I only care about if I'm making money today. Okay. So we have rules that you got to follow. And if you can't follow these rules, then really you shouldn't become a member. You shouldn't be involved. To win in algorithmic mechanical trading, you must have no opinions about markets. Zero, none, nada, which I don't. Okay. Now, I do a daily update every day where I whine about things I'd like to be, but I always use whatever the algorithm tells me to do. If you violate number one, you will lose money. A trend is the basis of all profit. If you do not understand this, you should not be trading. If you pay attention to news, you will lose money trading. If for 1 minute you think you know more than the market, price is too high or too low, the market will take your money. It will always punish traders with so much hubris. We never sell at a top, nor do we buy at the bottom. That is for fools who insist on being right as opposed to making money. The market is going higher and you are short the market is right, okay? And you are wrong. If you are long and the market is going down, you are wrong. The objective of mechanical trading is to mirror the market. You always want to be doing what it's doing, and if you do, you will put yourself with the highest probabilities. And again, all you want is probability, because if you're trading a straight probability model, you're looking to be on the correct side of the market. Trend mechanical trading gives us a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term probability, and that was the whole key of being a floor trader. You had to get the edge, otherwise you couldn't make money. Bubba, you are one of my only gurus when it comes to all things associated with investing and trading. I am eternally grateful for all you continue to do in all these arenas. Again, we try to make sure that everybody understands. We make sure that you have a good feel for what we do. We do training in between. So again, we're always making sure that the number one thing is you're educated. All right. Now, regular futures, okay, the mini S&P, okay, is a contract that if it moves $1 or 1 full point, it's $50. Well, now with the micros, they move it $5. Okay. So what really happened is they're 1/10 the size. Now, the important thing here, though, is if some of you are options traders, have been around for a while, the important thing to understand is that back in the day, okay, the CBOE tried to come out with micro options on some of the very big stocks, and they were 10 lots instead of 100 lot, right? 10 shares instead of 100. But what the mistake that they made was that they never reduced the commission. So you could never even have enough liquidity based on the commission you had to pay to be able to trade them. It made it impossible, which is why it failed. Mini micros is the biggest product launch in the history of the Chicago Mercantile Exchange. And that's where I believe the next big thing is into the futures environment, and there's many products out there, the Dow, the Russell, the NASDAQ, grains, oil, everything's out there to you and for you to be able to use and get yourself into these portfolios. Now, our objectives, okay, we strictly trade by rules. Okay, there isn't a negotiation of the rules. I'm not negotiating with my wife to do something. These are straight rules. Okay, the exit and entries are defined. Okay, set it and forget it. That's what we do. Okay, we don't trade off a gut instinct. We don't determine by choices, or we don't calculate anything. We're strictly trading basis on what the algorithm tells us to do. Because at the end of the day, okay, our objectives are what? Okay, make money. Nobody's here not to make money. I mean, you're tuning in to try to figure out ways to make money. We always want to try to keep the variance small. Now, it works most of the time, but there are times we have bigger drawdowns. And again, you'll see everything since the inception. You want to be balanced. and you want to keep the drawdown small. That's really all we're working on all the time, is to make sure that those things continue to occur. Now, managed futures, you know, I always knew and believed that a good trend following system keeps you in the market. And that's what you need, is something that will keep you away from pulling the trigger too fast on either side. Because if you've ever made a trade that went against you right away and you puked it out, and 10 minutes later it was back in your favor, a day later, again, these are things that the algorithm will help you work with. Okay, they keep you in the markets when you're supposed to be in. They reverse you when you're supposed to be on the other side. Whether you're on the long or the short side, it will reverse you to the other side. Now again, typically what we try to do in the bigger portfolios is, you know, they got energies, they got metals like grain, softs, currencies, interest rates. We try to have them all. Now again, we're trying to make everything as balanced for everybody, because again, that's what it comes down to, is trying to have somewhat of a balance when you're trading, because you want to make sure that, you know, that every product you own is not going in the exact same direction. Okay. Now, just for my friend Richard again, using a mechanical system is the best way to consistently make money trading. If you know that your system makes money over the long run, it is easier to take the signals and follow the system during periods of losses. If you rely on your own judgment during trading, you may find that you are fearful just when you should be courageous, or courageous just when you should be fearful. Very big fact, right? Ever happen to anybody here? Okay, did you ever panic out, okay, or chase it up because you didn't want to miss it? Happens all the time. Now, if you've ever heard of a family office, okay, that is where the big money goes to play, and the family offices. And, you know, again, I'm a big believer, okay, in the in using being able to bring tools to small investors, small individuals that did not have the same opportunity as the big money does. And that's where the family office comes in, because these products that we're going to show you, that we're sharing with you today, are really the same as, and they create your own little family office that allows smaller accounts to come and play in the big arena, and have the opportunity to take an account, you know, from 5 or 10 to 20 to 30 to 50 to 100, again, wherever it's going to go to. But they allow you to come in and play in an arena that allows you to follow the trend and be mechanical and not have to deal with a lot of the stuff that goes on. And that's one of the things, because that's the same reason that I started a high school program. In high schools, there's 600 high schools right now that use my high school investing program to teach financial literacy. And I donate that to the high schools. So again, I guess I ask you if you're ready for the next big thing. And of course, you know, everybody who's in it calls it gold, right? You remember Seinfeld? It's gold, Jerry. It's gold. Well, this is golden. All right. Now, again, we always think about probability. Okay. There's no thought of what the possibilities are. I only care about probability. Okay. Because at the end of the day, the numbers are the numbers. The numbers, if reported accurately, okay, are never wrong. Now, we know that sometimes numbers are kind of manipulated into your favor so that maybe somebody can do something for you, or the government sometimes maybe manipulate a number for a report. But at the end of the day, our numbers are what they are. There is no manipulation. There's no funny business with numbers, because again, what's my point? What do I want to do that for? I don't want unhappy members. I've got a very happy community that I want to stay a very happy community. Okay. And that's what we work on consistently, which is why we have our own chat room, which is why we text out every day. We all chat through the chat room together, so we can go through the good and the bad together. Okay. But again, it's always about probability. And again, win rate is very important. Okay. And what we do, because if you know what your win rate is, you know how to use the model correctly. And of course, our win rate is 66%. Okay. That's the number that's been proven over and over again since these model portfolios have been running. And that's not going to change anytime soon. Okay. That continues to be the accuracy of the number, and that everything that I do is at that about percentage. Now, again, you know, amateur traders want to be right. Pro traders want to make money. Do you want to be right, or do you want to make money? That's always a question, right? Trading is a game of probabilities. You don't have to be right every time. You just have to follow the rules. Okay. And lastly, okay, and this is the hard part, right? I always say you could publish the rules in a newspaper and no one would follow them. The key is consistency and discipline. Okay. If you can't do those things, if you can't be consistent, you can't follow rules, and you can't be disciplined, then you shouldn't be here. This is not for you. Okay. Because we talk about profit factor. Now, most people celebrate a profit factor of 2 for 1, right? So, if you took 1,000, you got 2,000, you got a 2 to 1 profit factor. Our profit factors are dramatically higher. They go up and down, but our profit factors are usually in 10, 11, 12, sometimes even higher numbers than that. Okay, why? Because again, what we do works and we know how to make it work best. Now, this whole model was born from our original, portfolio. This is what we call the 226. Now, this is not what we're showing today, but this is where it all came from. This is one of my portfolios that's always up and running. Okay, in that portfolio, I'm trading 29 products. I'm always long or short in these portfolios. And what you get with this, you see the entry dates, okay, the fill, okay, the last trade, the profits, and of course, when we talk about mega trades, in this model, it's 3,000 plus, and the ones you're going to see next are going to be 500 and plus. But we give you all the detail based on the trade, and you get this weekly, okay? Every Saturday morning, these reports come out. Now, here is what we're looking at today, the 28K micro. And what does the 28K mean? It means that this portfolio should take about $28,000 using about 9,000 margin. So we want everybody to have 3 times the margin at least, because you have to be able to suffer or go through the drawdown without panicking. But right now, okay, you'll see my exact position as of this morning, about 20 minutes ago. But we do the same thing here. We're always in. We do not change, okay, other than this when the signal changes. And of course, here's our 17K portfolio, okay? Again, all the information is always right there at your fingertips waiting for you, because we want to make sure that you have a great understanding of exactly what we're doing. Now here is, and I'm going to show you live. I'm going to pull up the live one, okay, that's from last Saturday, okay? Hold on, let me just push it up. I gotta open it up here for you. Give me a second. Okay. So here is the 17K from last Saturday. Okay. This is the report that was sent out. We had a big week, but that's not what I'm showing, because I'll show you the losers too. But here's every one of our positions. And we have had only one change this week, which actually this portfolio has been none, okay, because it doesn't trade natural gas. But here, okay, you can see the date of entry, okay, the order fill. Okay, here are the winning trades that are shaded, that are what we call mega trades. Okay, we trade in 15 markets right now. We have 15 winner trades, 1 loser, 14 winners. The profit factor here is 69, which is ridiculous. That's going to come down. Okay, again, it's going to come down, but I'm just saying that's what it is as of this report. This thing has returned since its inception, which is about a year. Okay, about 128%. Okay, and here is every week, okay, since last August. Now again, I share the losses as well. We took a major bath. We made a new high and then took a major bath the next week. But again, here is the equity curve. Okay, now believe it or not, this equity curve is very valuable. Why? Because it gives you an idea of what to expect next. We knew that it was going to draw down at some point. I certainly didn't know it was going to be the next week, but we knew that a drawdown was coming, because we knew there was going to be a regression to the mean. Okay, that's the way that models work. So we understood that, we knew that, we expected it. Okay, but of course, those who had enough capital, when we got down here, pressed their portfolios. Okay, and then if you look at the 28K from last week, okay, and here is the 28K from last week. Okay, same thing. Except this trades 18 markets. This adds in oil, crude oil, the 10-year bonds, and natural gas. Okay, and you can see this portfolio, people are pressing this portfolio right now. Okay, now this is exactly what we're looking for. It's made a lot of money. Okay, it's made 107% since inception. It's got a profit factor of 13.85. Okay, with all these markets and all these big trades, and of course, then we have our 5K. Now we had 2 5Ks. One, there was some margin adjustments, so we built another one, because again, we want to make sure that we have enough for the capital requirements. So this one's a relatively a baby. Okay, it's about a month old, but here, this trades these 4 markets. Okay, and is always in these 4 markets. So right now we don't have, listen, I don't have a great track record to show you here, but I will show you anything that I have, going back, because again, I believe in full disclosure anyways, so it makes it easier so that you have a good understanding. But we show you every Saturday morning at 3 a.m. Central Time. These reports get mailed out with the exact standing for how we did for that day. And the big one, okay, the one that's the oldest, so I'm going to show you that one too, just to get an idea for what we're doing, because it's using the same markets, right? It's just using them. Obviously, we're using the micros. Here's the full size ones. This portfolio is up 719% since November of 2016. Okay, this has a profit factor right now of 23 to 1. So if every $1,000 over 23,000. Okay, and again, you'll see some monster numbers here on both sides of the ledger. Okay, but again, we knew this has got to draw down a little bit. I mean, again, it's either going to go sideways and consolidate, or it's pulling back to the mean. But again, in the meantime, you know, we had huge weeks back to back up, and then 2 losers, and then again, we continue to rise, and that is exactly what we're trading. Now, I've got people that trade this from one size to 10 contracts per option, per future. But again, it's what we do. It's to make sure that everybody's always in the right position. Okay. And of course, here's the equity curve where we told you we would be pressing on. Now, again, every Saturday, you get an update. Okay. I do a little write up for you, and I give you all the mini micro portfolios. And every morning at 3 a.m., I text and I send out, okay, whether or not there's trades. Usually, hopefully, it says no new trades. We love when it says no new trades. Why? Because when it says no new trades, it means that everything's going our way. Okay. But again, we send it out. You get it every morning, 3 a.m. Now, again, it doesn't matter when you enter, because we're not here to hit for a couple of ticks. We're looking for every trade that is put on is designed to hit the home run. Okay. Not one trade is meant to make one tick. Okay. Everything is meant for monster home runs. And hopefully we are in for extended periods of time. That is the model, the design of the model, and what we're projecting. Okay. Now, this is my actual portfolio, one of them. This is the 28K. Now, I started this with 15K, just so you understand. I've got 7 futures accounts, so I didn't have to put the full margin. And I don't get nervous anyways, but this was February 7th. Okay, February 17th, 2020. Okay. And there was 22,000. Okay. Here is March 12th. Okay. I had started to press. We had come back down to the mean, and I was pressing on the reversal signals. Okay. And this is March 12th. Okay. And it was up to 45,000. Okay. Here is March 26th, and I'm not quite fully pressed. I'm still waiting for some reversals. But I had a little bit of a drawdown. And then I followed it up with another drawdown. Okay. This is as of April 4th. But here is, again, now I'm fully pressed. I'm in all the contracts. You can see them right here. You can see the open trade equity across the board on all these contracts. Okay. And then the last one I shot, the last one I shot here was April 16th at 43,693. You can see they're all pressed up. You can see now the open trade equity is $14,202. Okay. Now, from this morning, okay, this is from 11 o'clock Eastern this morning. This is my 28K, and we are long. I told you how long I am, right? You can see all the longs, the S&P, the Dow, the Russell. In the meantime, at that time, when the market was getting clobbered, I was only down $181 on 2 contracts for each. And that's really because of oil. But again, doesn't matter. I'm not going to say why. It was oil. But in the meantime, the 17K, which I also have, which is 3 contracts of each, was up $574 as of this morning. Okay, you can see what we carry in here. Again, these are real live actual results. That's what we do. Okay, again, you get the actual results from me each and every week without fail. Good or bad, you're getting them. Okay. And again, Bubba, like everyone else in the room, I can't thank you enough for the opportunity you have for me. My futures account has doubled, and I'm waiting to add contracts and the opportunity pullback. This is from March 15th. Okay. Now, some facts of trading. I contend that no one knows as to why markets do anything. Hence, it is impossible to predict future prices with any consistency or accuracy. Those that think they can forecast are fools and will soon find themselves broke. Gurus con gullible traders into believing they have some special knowledge of the future. Unfortunately, 99% of all trading is based on false premises. This is why so very few obtain large wealth from the trading game. If you want to make money trading, you simply buy when prices are going up and sell them when they're going down. It is that simple and basic, but this concept evades most traders because they think they must have no more. They'll make more if they know more. Okay, I contend it's the opposite. The less you know, the more you're going to make, because the more you can control your own emotions, the better off you're going to be. Now, here's some questions somebody had sent in for me. Okay, I'm considering a 28K portfolio. I have a margin account at IB. Could I trade in this account, or would it be preferable to open a separate account? You can trade in that account. Trade any account you want. Okay, again, I don't care where you go. I'll help you. I'll tell you where I go, but you can go anywhere you want. If I open a separate account trading 28K, how much should I fund the account? You put in 28K, that gives you 3 times the margin to keep you in the market. So again, you can suffer through if you happen to go to a drawdown in the first week. Okay. I'm in Central Time Zone, not really a morning person. So your trades alerts coming out at 3 to 4 a.m. I would not be making trades until 8:30 to 9. That's when, again, we don't care. I already know. Listen, I've got people all over the world that trade this. You know, I've got people in China, I've got people in Australia, I've got people in Hong Kong. Okay. So again, Japan, I know that not everybody's getting it at the same time, but it doesn't matter. We give you a benchmark price or where we entered based on this group called CTG. If I decide to use CTG to automate trading, what does it cost? How do I get set up? Well, again, CTG is a person or a brokerage firm that does letter of direction trading, okay, which means they will make all the entries for you. And I actually, 6 out of my 7 portfolios, they trade for me so that I don't have to think about them. And I'm doing too many other things during the day because I do a lot of day trading on my own. In fact, I'll be live day trading in front of a group in about an hour or so. But in the meantime, I let them do all my stuff. Now, their cost is a slight bit higher. Now, again, you can get cheaper, but in this model, okay, the portfolio model, commissions are not as big of a factor as they are if you're day trading. Okay, I mean, they're not much more, but they're slight more because they're doing the execution for you. Okay, if I started on the monthly pay, can I switch to annual? Of course. Okay, can you advise him when you think it's preferable time to initiate? Well, I think you initiate the minute you get in. Okay, the minute you sign up, the next day you enter every trade, whatever it is. Because again, I don't know, I have no idea when the signals are going to change. Okay, so there's no reason to wait because again, I always go back to the same thing. Okay, when way back last, I'm going to show you a chart live real quick. I got a little bit of time, not a lot, but I got a little time. I'm going to show you this live. Okay, so back last October, Amazon reported earnings. Okay, Amazon. And everybody in my group were all panicking. They were all, it was bad. We were along the NASDAQ. In fact, we were along the NASDAQ last year about 48 weeks out of the 52. But in the meantime, okay, here's the earnings came out. Oh my God, we got to get out. We got to get out. And I said, look, do what you want. Okay, you got to follow. I'm following the rules. Okay, if you don't follow the rules, then you're making a mistake. Meantime, go back and look at the NASDAQ future, which is what everybody was concerned about. And of course, here is Amazon's earnings. And the NASDAQ, for those who got out, it cost them $20,000 to $40,000 of profit by exiting the trade early. Okay, so again, I warn you about trying to outtime or outguess the market because you will find out more often than not that you're wrong. Okay, and of course, here are the real prices. Right now, the 28Ks at this moment is up 55% year to date, 81% lifetime. The 17K is up 42% right now, 86% lifetime. So if you'd like to join me on this journey, okay, and be part of my team and one of my members, okay, which they're all happy, okay, I'm inviting you now to come and join me. And of course, for now, for today, for this webinar, I'm offering $129 a month, but for today, you get the second month free. So your first 2 months are $129, and then it's $129 a month. And if you want to take advantage of that, you go to bubbatrading.com/micro. If you want to go for the annual, okay, the first year is 13 months. I give you a free month there as well. It's $1,400 for the first year, and then $1,400 a year you want to stay. And it's bubbatrading.com/micro year. And I will only take 50 people. That's all I take at a time. And after June 1st, this product will no longer be offered. We're going to take it down. We've got enough members, and we want to make sure everybody's trained and ready to rock. And I've always watched the volumes to make sure that nobody's clipping my signals and selling to somebody else. Okay. So again, it's bubbatrading.com/micro and bubbatrading.com/micro year if you want to come annually. And if you have any questions, I will take all of your questions now because I want to get Anna back on time.
All right, I think I'm ready. Well, thanks for having me here today, Anna, and let's get started. So what I'm going to talk about today and go over are some really great trading strategies for any kind of market, but really also fantastic when you get into more extreme type of market conditions where the markets are a lot of uncertainty, moving around really fast. And so in those kind of markets, you want to keep your trades as defined as you can as far as the risk goes. And using the butterfly and the long condor, you're going to see that these can really give you some super good defined risk trades, but very low risk trades, but also with the potential for big capital returns on that risk. So that's the thing I love about these types of strategies. Let me make just one thing else here. Yeah, okay, good. So that's the thing I like about it, and that's what we'll cover here today. So I've been actively trading the markets for over 30 years and started trading options back in the mid 80s on crude oil. So it's been something I've been passionate about for a long, long time. So when I look at trading, I look at the kind of three things that really, create successful trading, and that's number one, direction, and then timing, and then, managing your risk. And that's where the option side of things really come in handy. So the following webinar here today that I'm doing is for educational purposes. Any stocks, options, futures, ETFs mentioned does not constitute advice and should not be construed as a recommendation. Now, to me, the secret to profits there is to, number one, direction, timing, and then options. Options for your risk management, and there's so many different things that you can do to really take advantage of the great opportunities that options provide you. So, what if you had a trading strategy that could turn around your losing trades and maybe even turn them into winners? And what if that same strategy could capitalize on the two main option pricing components, which are time decay and volatility or volatility collapse, more than any other method? So the question would be, is this worth your time to learn it? Now, over my 30 plus years of trading options, I've found that the most valuable go-to option strategies that can really literally help any trader out there is to know and use and incorporate the butterfly and the long condor option spreads into your trading plan. Now, the huge advantage of these strategies are their unique option framework that it's going to allow you to construct trades that will provide you consistent and greater returns in any type of trade environment, and especially high volatility markets due to their simple but dynamic structure. And because they're structured to require only a small amount of your hard-earned capital, your trading returns are going to be greater and your trading stress is going to be very, very low. And that's always a major, major win. Now, the butterflies and long condors are also very dynamic, and they can be traded for a variety of different reasons with different goals in mind. So in other words, once you learn the structures and how to use the butterfly and long condors, you're going to be covered for both your offense and defense. So your profit and your protection, goals and protection, and hedging. So that's the big thing. You can make some fantastic returns, but they're also perfect for hedging. So these types of strategies can work no matter what the markets are doing. They can be in an uptrend, downtrend, or sideways market action. They can provide income from stocks that are going nowhere. They'll help you to eliminate the stress of your trading where you don't have to be perfect, exactly perfect on a stock's direction or overall market. And they really help to eliminate that time decay expense that you're going to encounter from long decaying options. Now, they also are going to help to take the unsettling guesswork out of your trading. So they can be structured at a very low cost or capital at risk. And as you're going to see here in a little bit, they can offer you 10-to-1 or higher type of returns on your risk. So it's a really great structure for these two different option strategies. So the other benefits are butterflies and condors are also very, very flexible, as you'll see ahead. We'll go through a lot of examples here in a few minutes. And once you just learn the basic fundamental setups, you can then adapt these option strategies to, both your goals and your market insights. So, you can structure them to be more delta neutral, where really the direction doesn't affect them as much. But to me, the real beauty is that they can be used directional for your directional trading, offering you either a bullish or bearish exposure to the markets, when you feel pretty comfortable or sure about a certain direction that your stock is headed. But the great part about it is if you're wrong, the butterfly and long condor are also going to help you to keep your risk low, managing your risk, and at the same time, though, retaining the potential for big, large returns on that risk. And that's a really win-win situation for you. Now, let's be real, though. These types of option spreads are not going to give you that unlimited profit potential if you're just like buying calls or something, but they're usually going to cost you a lot less than buying outrights, and they really do offer you an amazing risk to reward trade setup. So this means that the butterflies and long condors can significantly increase the probability of your winning trades while also at the same time reducing your risk. And to me, that's what it's all about in trading. So, controlling your risk and keeping that risk under control is what's going to lead you to consistent returns and keep you into the business of trading. Now, the other great aspect of the butterfly and condors, they're perfect or fantastic hedging mechanism. So when you screw something up in your trading, which I'm sure none of us do here, right, except for me probably, but they can be used as a fast, low-cost way to cover your you-know-what pronto when your position goes against you. And I've literally found no other hedging strategy that comes close to incorporating or using this butterfly or condor strategy to hedge or hedge out a core trade that you might have on going against you. So by constructing a butterfly or a long condor around a strike that is under pressure from another core trade, such as maybe you put on a credit spread and it starts to go against your debit spread, you'll find that this becomes the best way to immediately neutralize and control your risk. So you can take that risk, you can neutralize it immediately, but you can also cut the risk down and reduce it. And so it really is a great way to, also minimize your losses, but also control your stress of your trading. So for example, you could keep your original position open by just implementing either the butterfly or a long condor hedge on your original position. So it's this hedging strategy, what it does, it's going to take advantage of the time decay component of the strategy, and that's going to help you while you wait. Now, many times you'll see a trade, all you need to do is, you have that trade, it's going perfectly the direction you want it to go. Some news comes out, stalls it out, and then you have to make a decision. Maybe you have to stop it out, and then you get out and it continues back. So that happens so often. But when you do this kind of hedging, it allows you to wait out some of the kind of the rough patches of your trading, and you're actually getting paid while you wait. So a lot of times that's all you need, just that little bit more time for your original position to stabilize and then move back in your favor. At that point, then you could remove the hedge, stick with your original trade, riding it for what it's worth. Now, when we look at the butterfly, it's very simplistic structure really. So it just comes down to two vertical spreads. So in this example, this could be like you're long a call and a call debit spread, right? So you're long call, short a call. So you've got a call debit spread. In this example, your cost of the trade is $300. So that's also your max risk. So it's defined risk, not too bad. But what I always want to do is never lose your maximum risk. So we could easily neutralize and reduce this trade just by adding another vertical spread to it, which would be a vertical credit spread. So we could do that. It'll then neutralize that risk and also reduce your risk of $300 by doing that spread. So here would be adding a bear call credit spread. And in this example, you bring in $200 credit. All right. So now you've just taken that $300 risk and you've reduced it down to $100 of risk. And you've structured now what we call a balanced butterfly. So in this example, you've got a balanced butterfly, which is made up of those two different spreads, and you've got what we call a profit tent or profit zone here. So sometimes you have to do nothing else, and if it goes out in your zone of profit in the expiration, you can make a really great return on that risk, or you can leg out of the debit spread side, or you can leg out of the credit spread side. So it gives you a lot of flexibility in your trading, but the main thing, it neutralizes that risk, gives you some time to kind of figure out what's going to happen next in the market, and then take the appropriate action. So that's the thing I really like about it, because a lot of times when the markets are moving really fast, you tend to make mistakes, and you might stop yourself out, and then you're kicking yourself because later that day or the next day the market moves back in your favor. So what I've found is a lot of times when you neutralize your trades doing this structure, then you can have time to sit back and let that market kind of stabilize. Now, here's the long condor, and it's a very similar structure to the butterfly. The thing is, the difference is just it's going to widen out your profit zone. So instead of having sharing the same short strike here as the butterfly, we can widen out that profit zone by spreading out that short bear call credit spread. So you can do these with calls or puts. If you're looking for an upside move, calls, downside move, puts. So once you understand the structure, they're very, very flexible, and you can, really get in and out of them and use them a lot of times for kind of legging into these types of trades, which provides you a lot of different options for your trading. Now, the core concepts that make the butterfly and the long condor really amazing strategies are, that pricing components of your option. So the most important one being kind of the price being option theta decay or time decay. So when we look at option butterflies and condors, the strategy really comes down to understanding how the option pricing model works and the concept of time decay or theta and the effect that it has on the price of your option. So let's take a kind of a review of this core concept. Now, when we look at the option theta, theta tells us how much an option price is going to go down over time. So that's the rate of decay of your stock's option. And time decay occurs because that extrinsic value or that time value of the option diminishes as expiration draws near. And it's going to be an asset, or it's going to decay and eventually go to zero at the end of your expiration. So we want to take advantage of that, in our trading. And with these two structures, the butterfly and the long condor, these are actually structures or strategies that are actually selling time and also selling volatility, which both go to zero at expiration. So when we look at the butterfly and long condor trades, they share that component of option pricing, which is time decay and volatility decay. All right, so here's an example of how that would work. And so you can keep your risk super low, but also at the same time providing you a big, huge return on that risk. So in this example, we've got XYZ trading at $45, and we're looking, and we're looking for a move, just a small move down to 43. So these can be great for short-term trades, anywhere from 1 or 2 days or out to 6 or 7, or you can do them longer term. But they're great for shorter-term directional trades, and you don't have to have a lot of price movement. So here we're just looking for a move down to 43. So this is a butterfly to keep it very low risk by keeping the spread width very narrow. So we control the spread width, and that controls our risk. So in this example, you buy the May 44 put, and you're going to pay $2.38. So that'd be like $238. And then you're going to sell the 43 put below it and bring in $1.67. And then you're going to sell that 43 put again and buy the 42 put below it. So your body, the butterfly gets its name from the short strikes or your body, and that's typically your target. So you're targeting here in this example 43. So your short strike or the body of the butterfly then is at 43 area. So here's your wing, the 44 put is long, your short here, your wing here is long. So that creates that butterfly structure. So if you look at the cost of this trade, then you've got $2.38, that debit cost, you've got $1.06 here, and then you've got your 2 credits from the $1.67 that you sold at the body, and times 100 to make it into option contract or spread. So your max risk in this example is $10. So if you did 1 option spread, butterfly here, it would be $10 of risk. If you did 10, you've got $100 of risk. Now your profit is just taking that middle strike, and right here, your middle strike of 43, less your lower strike here of 42. So it gives you a dollar-wide spread, less the cost of the trade, times 100 to convert it to that option spread. All right, so your potential profit here would be $90, okay? 90 cents or $90. So you can see that the potential here is huge. You could theoretically make $90 on a risk of just 10, so that would be a 900% return, or you're risking $1 to make 9, so 9 to 1. Now, in a butterfly, you'll never make the max because of just the way when it settles out, you can't get it perfect. But just think about that. If you can make a 900% return, are you happy with the 50%, 60 or 100 or, whatever? So it can really add up. So we can control the width of the spread and make our profit zones big and, really capture, some really great profits, or we can make the profit zones narrow to keep the risk low. So that's how we can control risk versus reward. And we'll go through a lot of examples here in a minute to show you how this works. So how do you choose the best butterfly or long condor strategy for your trading goals? And so in my opinion, one major goal for every trader out there, everybody here today, should be to look to select trades based on what's going to provide you the most consistent positive returns, looking for low defined risk and not always the biggest, greatest, home run type of returns. So you're going to be able to stay in the game a lot longer if you're just really trading with good defined risk. So you just do singles and doubles, and occasionally you hit that triple or home run. So you're just staying in the game. So you want to control that risk. And with these strategies, it really allows you to do that. So one of the best ways then to achieve this is to be aware of the different option strategies that are out there, how they work, and then select the one that's going to be best suited for the market environment you're trading and your specific trading goals. So, John might have $100,000 of trading capital, and Amy has 10,000. So it's going to make a difference as to your risk profile and the types of trades that you do. But the one thing you'll find if you do the butterflies and look at doing these strategies is that you can do it with any size account. You can do it with a small account, $2,000 or $3,000 account or smaller, or you can do it with a huge account. So I had set up a brokerage group for crude oil back in about 2009, and we would do a lot of these butterflies for hedge funds. And so they were doing a lot of these on crude oil. And so, they were doing, I remember one of them, they did 20,000 contracts for oil on a butterfly. So literally you can do huge volume or you can do low volume. So the outcome is that they can very, very be risk defined, low risk, but very, very big returns. And so they can be a really favorite trading strategy of not only the small trader, but the big traders as well. So when we look at the butterflies, I call it what I call the butterfly family. So you've got a lot of different variations of butterflies. You can use the long call or put butterflies. So you can use calls or puts. You can do what we call a broken wing or skip strike butterfly using calls or puts. You can do what I refer to as a ninja butterfly, which is an unbalanced or ratio butterfly. And then you can do the wide wing butterflies. You can do an iron butterfly. And then the hedging is a whole another category of using butterflies. And then the long condor, which is another variation of kind of a butterfly. So it gives you a lot of variations and flexibility of different strategies and option spreads that you can use for the different market conditions. So let's take a look at a lot of these different trades so you can get an idea of how they work. So first we'll go through butterflies and then we'll go into some long condors. So when we're doing butterflies, we can adjust our risk in the profit potential based on the wingspan of the butterfly. So in this first example, this is a narrow wing butterfly. So the width is going to be like $1 spread or $100 per spread. So it's going to be very, very low risk, but the reward is just super amazing. All right, so you could also, sometimes I'll call these maybe a lotto trade because you can get the risk where it's like in that example I showed you only 10 cents or $10, but the payoff could be, pretty big. So in this example, this was a butterfly trade targeting on SPY. The ETFs are really great for this, very liquid. The index options, SPX, NDX, they're good for it. Just a lot of different stocks are fantastic. You want some good liquidity, but there's a lot of that out there with the various stocks and ETFs. So in this example, we were targeting just to move up here to the 618. I like to use the Fibonacci levels for targets. So we're looking for a move here to about 273. And there's also a lot of option activity there. So we wanted a low risk trade in case that it rolled straight over. So in this trade setup, it was put on the 14th and taken off 2 days later at expiration and set this up for 10 cents. All right, so in this trade, you'll see the spread width is just the difference between the strikes. Okay, so here you're long the 272 call, short the 273, and then you sell the 273 again, buy the 274. So here's a call debit spread, all right, combined with a bear call credit spread, and just created a very narrow wing butterfly, dollar wide. So you can see down here, the cost of this trade is 10 cents or $10. So the spread width is 100 less your cost of the trade of 10. So the theoretical potential max profit at expiration would be $90 or 900% return, 9 to 1. Now, 2 days later, this was going out making 70 per spread, which is a 700% return. So, not too bad. That's the beauty and the amazing thing about these structures. You have such low risk, but high return. So that would be a per spread. So you did one spread, $10 risk, $90 potential profit, or 10 spreads, etc. So let's take a look here at the risk profile. So you'll see how this works out. If I can erase it, we'll move to the next slide. All right, so this is what we call the risk profile of that trade. So if you look here, that profit kind of tent And you see the purple line is right up here. That's what's left. That's where time decays. So the purple, when we look at our option analytics, this think or swim, the purple is what's telling us what that price is based on with time decay and factoring in the timing element component. So in this trade, you can see it was set up on the 14th, and then at expiration, it was going out right here, right at 273.08. So almost perfect to the upside, but not quite. So this went from a 10-cent debit or $10 per spread to 80, which is your $70 profit per spread, and that's a return of $700. So on this 4 contracts was up over $280. And the beauty of it again, though, is that your risk is so low that if you do get it wrong, you're able to survive and trade another day with low defined risk like this. Now, if this had gone out, you can see that black area, that's what's left of the profit from the time decay that's still left in that spread and any of the volatility, which both of those components go to zero at expiration. So that's what makes the butterfly really work really well as a target trade into expiration. Now, the next one will be a wide wing butterfly, so we can expand out the wing and make our kind of net bigger. So just kind of think of it this way. So let's say you're trying to catch a butterfly, right? Now it's going to be easier to catch that butterfly if you've got a really wide net versus having a very, very small, narrow net. So by increasing the width of our butterfly, we can make a very big profit zone versus a very narrow profit zone. Now the trade-off is this will cost a little bit more, but the price, you'll have a bigger profit zone for that price to make profit versus the narrow butterfly. So there's a trade-off on each one. So let's take a look at a wide wing butterfly here. So here's a trade on Apple that we set up. This was April the 13th. And again, this was for into expiration on the 17th. So we're looking, it was trading right here at 270, right on that 50% retracement. Again, I like to use Fibonacci, and then our trading models based on kind of momentum for direction. So we had a trade, we set this up right here and went long this called butterfly, targeting this 280 area right here. There's some moving average resistance you can see coming in, and then we had this Fibonacci level above. So we were looking for this to stall out right about there at around 280. So we wanted to do a low risk trade, and we set this up with a wider wing butterfly. So in this example, we did used calls because we're looking for upside move. So bought 275 call, sold the 280. So there's a $5 wide spread, called that spread, then sold the 280, bought the 285. So a wider profit zone or wider body butterfly here. So you can see the cost of this trade was only still very low, 87 cents or $87 per spread. So the spread width is 500 less your cost of the trade. So the difference is your theoretical potential profit. If you were to get it exactly perfect right here, you theoretically could make $413 on that risk of 87. That would be a 475% return. And that's, looking at risk reward, you're risking $1 to make 4.75 per dollar. All right, so potential really big payoff. But if we just get anywhere in this zone, you can still make a really great profit and still be very, very happy with the outcome of that trade because the risk is so low. So if everything falls apart on you, your total risk without any adjustments would be 87 per spread. So this went out right here at expiration, not perfect, but close enough. And we weren't really looking, all we wanted to do was go out in this zone at expiration would give us big potential. So this went out at 279.23, which was trading right there. And see all that black area, that's still what's potentially left of profit. So this was taken off for $223 per spread profit on that risk of 87. So it went from an 87 cent debit to 310, and there's your profit per spread of 223 on that risk of 87. So that was a not bad 256% return. All right, so just happy with that all day long. But that's the structure in the spread, and we can go in then see what our risk reward is starting out with, and then have an idea what kind of outcome we could have. So that's the trade there, excuse me, on Apple for kind of a wider wing butterfly. Now here's another directional trade. This is a short trade on SPY. So I love to do these butterflies usually with SPY or SPX, and with some of the major stocks. Apple is great, Microsoft, even sometimes Amazon. You'll see a couple examples we'll do there. But this is a wider wing butterfly. This is the spread width on this one is going to be $300 wide. So we were looking for a short trade, and we're looking for a target. Again, I like to use Fibonacci. So we were targeting. Before I ever put a trade on, you want to always have your target where you think it's going to go. So I base my targets on Fibonacci. So we're looking at this movement there, and we also have moving average support. So I like to use moving averages and Fibonacci. So target was right here to 332, and the next target would be down to 330. So we set this short trade up targeting 332. So we did this with a butterfly and a very short duration trade again. So let me get rid of this. And so with this trade, we did it was trading at 232, or no, excuse me, it's trading at 236. And we set this up targeting that Fibonacci level at 232. So we did this $3 wide and bought the 335 put, sold the 332, okay? Put debit spread, then sold the 332, bought the 329 bull put credit spread, $3 wide butterfly. So the spread width $3, $300. Let's look at the cost of this. $35 is the maximum cost or risk. So it's a debit paid as your risk, and then the difference is your potential return, or on that risk. So 265 would be your maximum potential profit, which, look at that, that'd be a 757% return. Now we never go into these thinking we're going to make that max, but just shows you the potential magnitude of the trade. And this went out 3 days later with a nice profit of $156 per spread on 35, which is huge. Still a big reward, right? So that's $445 return, percent return on that small risk of 35. So here's the trade, cost 35, and on the 21st it hits the 190 target, and so we took it off. What? This was the profit, 190. Okay, so this hit our target right here, that 332 down here, and you can see it was trading right here. So this was up $155 per spread at that point in time. So that was a 156 per spread, and on that risk of 35, that was up 445% return. So that's perfect there. I mean, not perfect in the middle, but still good enough. See how wide that is? So we had a nice big fat profit zone. The other great thing is these are positive theta. So, if the market just stalls, you're getting paid, you're getting that theta decay each and every day as well while you wait it out. Okay, so that's a look there at that wider wing butterfly. Yeah, when it hits your butterfly, your target depends on which day, if it's typically the day before and that day of expiration, I'll look to take it off. But if you make the butterfly wide enough, you can get your targets hit at any point in time. So let's say you made this really wide and you still had a number of days to expiration, but it hits your target. Even here, that'll still be a really good profit per spread. So the wider you make the butterfly, you make it $10 wide. It just varies where the market price is, but the wider, the bigger your zone of profit, and you don't have to be as precise on, threading the needle. Now here's another example of a butterfly on Amazon. So Amazon, as everybody knows, is a very pricey stock. So this was doing a butterfly on Amazon with a $10 wide spread to make a big wide profit zone. So that'd be $1,000. So Amazon had been trading, it had this big resistance that kept bouncing off this 1830 level right here. So go up, bounce off, had a big, huge support here, the 200-day moving average. So we were looking to see if we could get a, push again to that 1830, but we wanted to do it with as cheap of a trade as we could because the cost of Amazon. I mean, if you bought 100 shares of Amazon and you paid $1,782, that's $178,000 per 100 shares. But by using the butterfly, you can get that leverage. In this trade, you'll see the example was your cost was $80. All right, so here's the trade doing a $10 wide butterfly targeting that 1830 strike. So it was trading at 1782. We were going to target 1830. So we bought the 1820 call, sold the 1830, sold the 1830, bought the 1840. So $10 wide spread. So per option, that would be $1,000. The cost of the trade then was $80, 80-cent debit. So you're controlling a stock, 100 shares of a stock, in this example would be 178,000. You're controlling that for $80. Pretty amazing. And your potential theoretical profit, if it hit that exactly at expiration, would be a $920, which is 1,150% return, 11.5 to 1 positive risk ratio. So going into the trade, not looking to make that perfect score, you could potentially, but just looking to make anything inside of it, but wanted to have a very cheap trade in case you're wrong with Amazon, you're not going to risk very much. All right, so this is the thing that's so beautiful about it. Now, here's the cool thing about the trade too, is that theta decay. All right, so this is Amazon in the AM of the 6th, which was the expiration date. All right, so this was set up. And you can see it was trading right here. This was like at 9:30, 10 in the morning on day of expiration. So it was trading right here at 1836, right there, 1836, okay? We were targeting this 1830 level. So at that point in time in the morning, this trade went from 80-cent debit to $230. So it's up $150 per spread. Not bad. You know, that's still a fantastic return, 187%. All right, that's in the morning. Now look what happens in the afternoon. This thing goes 4 times that 150 profit goes up by 4 times because of the theta decay getting stripped out at the end of the day and volatility. All right, so this is the thing that's pretty exciting about this type of strategy. So here it is the same day. This is going into about 2:15 Central, 2:30 Central. And so it's trading. You can see the tent, see how wide it's been stripping out. You can see here, see all that? That's still what's left in the spread for time decay that day and potential volatility. Now here it is at about 2:30 Central the same day, and you can see the spread then went from $80 to now $695, so it's up $615 or $14 per spread. So this is 4 times more than it was in the morning. Okay, so that's up now almost 770% return, and that's just the same day, just about 2 or 3 or 4 hours later. All right, because of that, you know, theta decay going to basically 0 and volatility. So that's the pretty cool thing about it. And your risk there is $80 if everything went wrong against you. Now the long condor is very similar, but this is also a great structure for hedging and giving you low risk and big returns, but a bigger zone. So this is one that we set up on Adobe. All right, so this could be calls or puts. So call debit spread with the bear call credit spread in this situation. We have alert service, so this is one of the trade alerts sent out on the trade alert service, and so this was a call condor. So we were looking for a move here, just a break to the upside, not looking for a huge move. And we were looking for this just to move from where it was trading here at 338 up to about this 340, 45 level in here. So we did this with a very low risk trade called Condor. So this was basically buying the 340 call, selling the 342 and a half, $2.50 wide call debit spread. That cost was 115 or 115. And then at the same time selling the 360, 362 and a half, bringing in a credit of 33. So we actually legged into this one because it started out as a debit spread and then structured it to reduce our risk. And also this gives you a positive theta. So if you do a call debit spread, your theta decay is not going to be much, but it's still going to be negative. But by adding this layer to it, it turns this into a positive theta trade as well. So this went out about perfect. You know, if you go out between the 2 spreads, that's your max profit, which it did right here at expiration. So receive the max profit on the debit spread side of 135, and then the max profit there on the credit spread. So the credit spread expired worthless. This expired max profit. So there was a return $168 on that risk of 82. So 205% return. So, you know, a lot easier to swallow these types of trades. If you get it wrong, versus some others. And also we can do a lot more adjustments there. We could add additional credit spreads and things like that. There's just a lot of things you can do with the structure. Now here's another example. This is one that we set up on TTD, and then it's set up as a debit spread and converted it to the Condor. So we were looking for a breakout. It was trading at 292 roughly here, looking for a move up to like that 305 level. All right, so we started the trade out as a debit spread, but then it started looking like it might roll over and stall that day. So we went ahead and hedged it out pretty fast. So it started out with just, a max risk of 95 and a potential profit of 155. And then we immediately hedged it by selling the 312.5, 315 bear call credit spread above against it, and reduced our trade cost down to $55 risk with potential to make 195, and also gave us a positive theta trade. All right, and then this went out perfect between the two short, under the bear call credit spread and above the call debit spread. So turned out to be a max profit going out between those two spreads. And so went out right here, giving us that max return of 195 on that risk of 55. So another example there. So think about this too. So if you bought the stock and you paid $292.30 and you sold it at 305, you would made 4.5% return. Here you make 355. So that's the beauty of options. And here's another quick example, because I'm about to run out of time, but this was a short trade that we converted into a free trade. So this was a put debit spread that we did 273.70 for $65 of risk, with potential to make 235. But then when the market fell down, we sold a bull put credit spread against it. When it was trading at 270, it hit our target, brought in $65 of credit here, putting us into this trade with zero risk now. And then you can just afford to wait it out. So at the end of the expiration, this was now trading right here. So it was up 164 per spread on zero risk. If we stayed in the original trade, it was up $98 or 150%. This one has zero risk, and it went out making 164. So just a great structure overall. And if you'd like to learn more about this, hopefully you got enough out of this presentation today you could figure out yourself. But if you'd like more on how to do this, I've got a really great course here. And this was an on-demand course that I did a couple months back on this. So it's really fresh, new course. And here's the link if you'd like to take advantage of it. It's got a lot of great bonuses, but it's $97. So here's what all you're going to get with this course. So this was a 6+ hour live course that I did, and we recorded. It's broken down in 30-minute modules. So you'll get the full course. It's yours. You'll get a login that's yours forever. And then these are modules that you can go, if there's a certain area that you're not, you need to go back to, it's easy to follow. You'll get the full PowerPoint of the course. It's a 418-page course PowerPoint, so very detailed course. And then we'll do a live follow-up Q&A, which will also be recorded. I'll send this link out to you, probably either be next week or the week after. And then you'll get my option trading tutorial with this, my option manifesto, some other really great option strategies, and my Greek power tool guide. So you'll get all this plus one trial free month membership to my trading club for 30 days. You can start that when you want. If you want to delay it a day or two or a week or two, just send us an email. So you can get all this here today if you use that link for $97. So here's the link one more time. And so you'll get the full Butterfly Condor course, 6-hour course, 418-page training manual, the whole course. So this is kind of what I call my blueprint course of options, butterflies, and condors. So it shows you just in detail all the different variations of how you can use them for income or profits or hedging. So with the course, we'll go through the review of the Greeks to start off with, and then how theta decay and implied volatility affects the price, how option pricing works. It's very important to understand that so you can understand why these strategies work. And then part 2, we'll go through the core basics of these trades that most people don't understand, what makes these trades work based on the Butterfly Condor Foundation, which are vertical spreads. And then we'll go through each of these strategies with detail and with examples of how to use a long call or put butterfly, the wide wing butterfly, broken wing butterfly, a ratio butterfly, broken wing ratio, iron butterfly, vacation, long condor. So a lot of stuff here in this course, and that's why it's 6+ hours. But it's, if you want to take it, please join us. And it's be $97 for everybody here today. So that's the basics of the course. And then the other part of it is using these strategies for what we call option pinning trades for monthly option expiration. These are a great strategy to use for that. And then the big part of it is using how to use the condor, which are the combination of vertical debit spreads and credit spreads, to create these really low risk, high return trades, and how, why, and when to use those. And then the big part of this course that I want everybody to hopefully get out of it is how to use these for hedging. Okay, hedging a core position that you might have on, using this butterfly hedge or condor hedge, and how they're used to hedge vertical spreads like vertical credit spreads or debit spreads that might go against you. And then you'll get a resource kind of chapter, what is assignment risk, expiration risk, auto exercise, and a trading library of 58 different pages of butterfly trades that you can go back and look at to see how they work. So it's a really very comprehensive, detailed course, and just a lot of great stuff, really good feedback. If I had more time, I'd go through. So you could have the follow-up Q&A will then come. That'll be live plus recorded. My trading tutorial, 60-page trading guide with videos on the option Greeks. And then my option strategy, this will be a printout for 15 different option strategies that will also come with the course that you can look at. And then my Greek power tool guide, so you can print this out, put on your desktop, what are the Greeks, etc. And you'll get access to my trading club, virtual trading room each and every day during the morning and afternoon during the week. So you get access to that. Our Q&A every Tuesday live and recorded, 60% discounts on all courses and software, and all that for 30 days for your free trial. So a lot of great stuff, and if I had more time, I'd go through a lot more examples and stuff with you. So hopefully this, let me make sure that link is working. Yeah, link works good there. You should be able to just copy and paste that, or just click on it, and then you can use PayPal or your credit card. This is US dollar, but if you use PayPal, it'll convert it for you. Excuse me. So appreciate everybody taking the time to be here today. I think I'm out of time, and good luck trading the rest of the day and the rest of the week.
Fantastic. Okay, thanks everybody, and I look forward to presenting what we do at Intelligent Trading Academy here in London. We have an office in Munich as well, so we're used to teaching traders. We work with about 100, 150 traders at any one time, and the idea is to develop them into being a consistent trader and understand what the FX, commodities, indices, and maybe some equities, how we can trade those profitably. So we have a little presentation, and I will be going to our live trading book as well, so you can see exactly what we're doing and how we're getting on. We always like to be clear and transparent in everything that we're doing. So we're going to talk about a little bit about navigating the markets and how we prepare ourselves, because we need to do this, and you need to align yourself with experienced people before you jump in, because you can lose a lot of money out of trading if you don't understand risk management, how you can manage your trade, and what setups you're looking for. Here at Intelligent Trading Academy, we think it's really important that you understand why you're entering a trade and what we're looking for. I've looked at many things over the years, and I always come back to kind of momentum trading. I look at some trend trading, very much some standard techniques. I've taught technical analysis at the London School of Economics, so there's plenty. We know what we're doing. So hope you enjoy the session. I appreciate any feedback by email, which is info@intelligenttradingacademy.com. We'll put that on the chat for you shortly, so you can ask any questions after this presentation. So who are we? So we have traders here, about 40 odd years combined experience in professional and institutional trading companies. We've been professional fund managers, market makers. We know quite a bit about how to read the markets, how we can read price action to make a credible trade and entry. We have been government-backed. UK government backed as a recognised and leading trading educator here in the UK. Our courses are CPD accredited. That's a continued professional development. We very much take an institutional conservative approach using simple and structured trading strategies. We've taught many individuals, and we're looking to hopefully take some more traders on and hopefully fund them. We do have a funded account program, which we will talk about at some time. We are a community of professional, supportive and like-minded individuals and providing trading education and mentoring. And the idea is we do have a pro trader VIP chat, which you would, if you people decide to join us, they would have access to, and we talk very much every day about trading. It's live, real time, and I post all our trade ideas and strategy updates on there. And our program will focus on the 3 key areas: psychology, risk management, and the trading strategies. But obviously, being part of a community of traders is very good, because we don't want to be isolated at any time. So who am I? This is me. I'm MSTA and CFTE. That means I'm a member of the Society of Technical Analysts, and I'm a certified financial technician. Actually been trading for 30 odd years now, and the majority of that time was at Societe Generale and Credit Suisse. I traded FX and equities as a market maker. I've worked in various centres over here in Europe. I very much take a disciplined and consistent approach to my trading, and wish to deploy and offer my experiences onto you, because I know sometimes it can seem very awe-inspiring, everything that's going on in the marketplace. But we want to be calm, conservative and collective traders. We don't want to be busy fools. We want to be, again, conservative, profitable traders. So why do people trade? More time, create secondary income. I mean, definitely at the time, the unfortunate times that we're in now, we're sitting at home trading and making money. So we still can do that, and that will give you a sense of achievement. We're trying to create our own wealth, increase our wealth. That's part of it. It's really good to understand technical analysis and the strategies, spotting profitable trading and investment opportunities. It's good to understand the risk management, understand our mindset. And really, by creating a discipline, by adopting a methodical approach, you should be in a better place to improve your trading and your trading results. So a trader really thinks that all their indicators and entries, they're pretty basic stuff here. What you've got to worry about is your risk management, trade management, and continuous learning. If I show you here a quick some screen that we've got here, it's MT4, typical to the brokers over here that we'll plug into and use. There's a couple of strategies here we look at. We've got those dots there, which are the parabolics. We have a couple of oscillators or confirmation indicators at the bottom. One's called relative vigor, one's a standard MACD. And we can look for credible trading opportunities there. So I can happily show you trades that are live and that are trading here. I don't mind if we've got losing trades, so be it. I don't win 100 trades or 100% of my trades. It'd be foolish for me to think anyone would, but if I can win 70 to 80% of the time, I'm happy. But what you will see is our account history. You can see we're managing them effectively. Yeah, so all these little ones here is where we're being proactive with our stop. There, we're not necessarily putting a target on it. We're actually letting it play out to its own devices. So again, not a bad day today. You can see the ones that we closed today, the 14th, 13th, 13th. So out of all those trades we've closed, that you can see from 1, 2, 3, 4, 5, 6 trades in the last 2 days, we've lost 1. So happy days. Oh, there's 1 down the bottom on the 12th we've lost. What's previous to that? Oh, we've had a good day there with that one. So that's on the same day. So our ratio of winning trades is a lot higher than anything that we're losing. But we're being proactive with our trade and capital management. That is very, very important for all us traders out there, especially as us, as we're offering our expertise into the marketplace. So remember, continuous learning, trade management and risk management, and it's always good to be diverse, accept new things, be responsible for your own actions, take responsibility for your trades, but learn the techniques of maybe some other traders that have learned over a period of time. I've taught this stuff to professional traders as well as new traders, just really how to spot a change in direction, how to look where's my support and resistance. Some people like using Fibonacci's for certain levels, all that kind of stuff. We can work with you. This course is not modular. It's designed to meet your individual needs, because your weaknesses might be somebody else's strengths and your strengths might be somebody else's weaknesses. So it's very much designed under our guidance to get you where you need to get to, and to get you onto our funded account program at some time. So we are about the education, we are independent, and it's good to learn new skills at any time. Learning to trade or to be involved in the equity markets or FX markets, whichever asset class instruments you prefer, we think it's really important to understand why you are entering a trade. Okay, so for us here at ITA, we're always trying to improve when to get in, when to get out. But for you as traders, you must understand why you're actually entering a trade and not taking a haphazard approach to your trading, because if you do that, you'll end up getting haphazard results. So even the top sportsmen and women, they continually strive for increased performance. Your top sports teams in the world, they don't just send out a team on the field with nothing behind them. They have backroom staff, they have their managers, coaches, dietitians, you know, all that to continually to try to improve their results. Even coping with mindset and pressure. You know, the press over here is a nightmare for anybody who's famous. So they've all got teams around them to help them cope, and hopefully we can help you do that. So it's exactly what we need to do with our trading, as we always looking to be flexible in our mindset and continually strive to improve our results. So here at ITA, we don't apply leverage. Some people like leverage, some don't, and there is a reason we don't tend to apply it here. So here's an example. If you deposit £2,500 into a broker and you leverage that by 20 times, that means you've got 50k available. If you risk 1% of that 50k, it's 500 quid. You lose 5 trades on the pop. You get a margin call from your broker requiring you to deposit more funds, again, to have access. I think, you know, for a new trader, £500 a trade is too much. People will, you know, offer you leverage. In our opinion, there are a few things wrong here. As I alluded to, £500 per trade for InvestorExpos is far too much to risk. You can easily lose 5 trades. I still lose trades. I don't, you know, but I know I will win more than I lose. But you can lose 5 on 5 trades. There's no issue about that, and probably you, as the professional traders out there, can very much understand that. You're really risking 20% of your initial deposit. So if you put in £2.5 grand, lose 5 trades at 500 quid, that's your £2.5 grand gone. So you've got to be very careful. So with us, if you put £2.5 grand down, you'd be risking £25 a trade. And that's 100 losing trades before your initial deposit is gone. So it keeps you in the game longer, and always apply common sense and choose your help and tuition wisely. And I think our ITA now is best in class. So we move on to technical analysis. Fundamental analysis examines earnings, dividends, new products, research. But technical analysis is looking at the charts and financial data. So we're looking at here, we look at candlesticks. And there are 3 main principles of technical analysis. 1, market action discounts everything. 2, prices moving trends. And 3, history tends to repeat itself. Those techies out there probably heard that all before, but you know, we can give you some examples here. Say in this Euro Aussie trade here, you can see it's a trend here. It's broken. You know, that's a kind of a distinguished pattern. We look to buy on the break, and we're now moving up nicely. So this is Euro Oz. Let me prove that we've got that actual trade on here. So, okay, we're up 700, 900, 800 odd quid on that one. That's fine. But our stop loss is actually above our entry. Risk-free trading, that's where I like to be. And you'll notice most of the other trades we've got up there are near enough at the risk-free trading level. So that's where we want to get to. And we need to be proactive in doing that. And I'm going to prompt you every day. I'll give you a daily email, and I'll put you in the VIP Skype chat where we're throwing lots of information at you to make sure you're on the ball and you're updating when you say we're updating. Okay, so when we talk about you know, history tends to repeat itself. There's lots of pattern recognition within technical analysis. So you could be looking at something like head and shoulders, double bottoms, triple tops, you know, things like that. So we can train you on those. They're standard techniques, but if you don't know how to apply them, they won't be of any use to you. And it takes some time. That's why people work with us for a minimum of 6 months. So we've got plenty of time to assess you to get you to one of our funded accounts. Okay. We also deploy some algorithms, so semi-automated. We're looking for these moving averages to cross at certain levels, depending on what days and what strategies that we've got. So an algorithmic trade is just a formula for us to help us program in a certain event, or when event in our candlestick when that happens, or our moving averages. So with many retail traders will use these, but we can put them onto your screen. You can see here. The couple that we've got here, or, you know, incorporates parabolics and moving averages here, and some other oscillators. You know, we've had some other trades on as well. Swissy yen, we've had that one here. Can you see we're back to that downtrend here. It's tried to ticket this more, we've had a tail or wick of our candlestick up, but it's now coming down. So again, risk-free trading. If we get stopped out there for not a lot, so be it. But within the structure, it's looking the same. Even our longer-term EMA here is proving problematic. So we would expect that to come lower, but we do get green candles in downtrends as you get red candles in uptrends. So nothing's going to go down immediately. Nothing goes up forever. So we have to manage that trade effectively, proactively, so it keeps us profitable more times than not. So we don't want to just leave a trade at 1-to-1 risk, so you're risking 1% and the structure of the chart goes way against us. That's not the way of trading. We want to be proactive with our capital management. Once we're in a trade, then that's the skill. That's how we manage it. We then manage it effectively by being proactive and sensible traders. So some of you have probably seen this. Of those, for the new people out there, we use candlesticks. So here, a green candlestick, which is known as a bullish candlestick, would open here and close higher than where it opened, and the wicks would be the low or the high. So, but the body of the candle is created from the open to the close. A bearish candle, just spin it on its head, it actually closes lower than where it opens, but the high and low wicks are the same, but the colors will be different. So a red would be a bearish candle, a green would be a bullish candle because it closed higher than where it opened. So by using a few set of rules, making it simple, we can put in some manual analysis alongside an automated algorithm. And here we go. We've got a nice opportunity to buy. So here was our buy. We know this long-term moving average could be problematic. So that would be our resistance where we're looking to get out. Here we sell. That's our opportunity. Here's our buy opportunity. Again, the 200-day would be very problematic. So we sell. Here we get a selling opportunity. And following those simple set of rules under our guidance, you'll be able to find good setups, higher probability trades that you can manage effectively. And you can see the opportunities come in all different shapes and sizes. Okay, so don't be afraid. If nothing's standard all of the time. I wish trading was that you could buy here, sell here, buy here, sell here. That'd be easy. Then you could have an algorithm to do it. But nothing, no candle is of the same length. No trend line is of the exact same construction. Some are longer than others. Yes, we need 3 credible touches for a proper trend line. We don't want to see just 3 candles touching. That's not a valid trend line. We want to see a solid, valid trend line, and ideally nothing too steep. So we want to make sure we are on the right page of how we learn in this craft, and you'll see as you go on that we hope we know what we are proving to be very good technical analysis and very good results for our community of 100-odd traders that we've got at the moment. So our strategies, they're simple and structured. I'll go through one particular one with you, which is called the fast track momentum. But as I said to you, I don't do boot camps or weekly classes. We work with people. We can do it remotely. We have an office in St Catherine's Dock in London. It's very nice. If you're UK based, you can come up there. I say we have an office in Munich too, as well as an office up in Manchester, the northern part of England. If not, we have many customers out of those centres that do everything remotely on Zoom or Skype, where we can show you everything that we do, set you up, get you set up, and things like that. So if we use a strategy, they're tried and tested, and they're simple and structured. Systematic, methodical discipline will give you some consistency. Obviously, risk management is key. Don't overcommit your capital. This is not a horse race where you're betting 25 burger to lose 100% of your capital. It's not like that. This is structured. This is higher probability. We're looking for the higher probability trades, and we're looking for obviously the more winners. If we're using a strategy as well, it will remove the ambiguity and emotional ties. So remember, the market does not pick on us individually. Psychology and mindset is very important, because obviously we all have a different way of thinking, different opinions, different beliefs. Okay, and trading will be unlike anything many of you would have done before, and it's important to get your mindset, management, and method right. You'll have a different tolerance to risk behaviors when in a trade, and you might have different styles of trading, and you need to find out what suits you, what kind of trader you are. You'll obviously be determined by your current work time. Majority of our traders will spend 45 minutes to an hour a day looking at the analysis, interacting with the community, asking us questions. What do we see here and things like that. So we'll create a trading plan, help you with your plans, obviously keeping yourself monitoring the trades, but it's obviously you need to keep focused on that trading plan and not your emotions. So our mind is probably taken up of 10% strategy, 30% risk management, 60% of the psychology and mindset. So look at that, it's really important graphic there that we must respect what our mindset is. We must find a discipline to help alleviate some of the anxieties that trading can bring. So by creating a discipline, we want to see some consistency, some confidence, which will breed some confidence. The more patient you are in trader, the more profitable you are, because we're going to be proactively managing those stops. With that, you should determine some profits and success, or at least get yourself to be in some kind of consistent as a trader. So by applying a discipline, by following some rules and a strategy, you hopefully will create some consistency. You'll understand why you're entering a trade. You should build some confidence, add a little bit of patience, and hopefully you'll see a better consistency of your results moving forward. So traders really lose for a plethora of reasons, really. They have improper risk. They don't look after their money management properly. They revenge trade. They let emotions take over. They chase the market. They break their own rules. They don't have a structure. They let losses run and cut the winners too quickly. Really, you should let the winners run and you should cut your losses. And that's really what we do when we're being proactive, moving our stock. And I would rather, I think manual, whilst algorithms and stuff is good, it's always good to look at the markets with your own eyes. Okay, sometimes you get a different feeling. Sometimes something looks slightly different. So we like to deploy and use and teach a lot of manual analysis, because I think that's really critical and important when you are trading, because I like to look at the screens. I like to make my own decisions. Then I can be responsible for my own results. And I think those traders that are with us have been benefiting very nicely from the recent run that we've had in the markets. So nobody's a victim of the financial marketplaces, because we can't control the price movement or the outcome of a trade. We can control out when we trade, what we trade, when we exit the trade. We can control our risk, a certain effect, our psychology and mindset with the strategies that we got. We know our worst case scenario is only going to be 1%. We choose our tools, and you continue to choose your development and learning. And that's critical. Your continued development and learning will get you to where hopefully you'll get to be understanding the markets a little bit better and being a more consistent trader. So our program, we back our education with a funded account option, which is nice, because obviously you've got to treat this as a business. Our funded account option will look something like this. If we give you $10,000 to start with, if you make 6%, we then up it to 40. If you make 10% thereafter, we get it up to 80. After your 6 months, hopefully most of you are on 80. There's 8,000. If you're making 10% a month, bear in mind most of our traders are making 18 to 20. There's 8 grand there, which we split 50-50, so 4,000 each. But you've got an opportunity to keep doubling that up to just over a 7-figure account. But we are stringent with our rules, and we are going to promote and help you, guide you along the way to being that trader. So really, we're backing, I'm very confident with our education, and we're backing that with the funded account route, which obviously we only have a certain amount available at any one time. And I know there's a few left if anyone is interested during this session. So if you are interested in that, you can just drop me an email, and I'll pop my email on the chat for us, so you can have a look. Let me know what you want to do. We can set up some freebies for you as well. It's info@intelligenttradingacademy.com. My name is Adrian Slack. So please, you can email me anything you have. So happy to look and to see what's going on there. If you look at, if we go back to where we are, we do remote sessions, we do trader Skype chats. We can help you in many different ways. So with our algorithms, hopefully you'll get a chance to be a decent, consistent trader. And I think it's really important that we really understand why we're entering a trade. You'll get a daily email from us that we do early day, 9:30 GMT. We send that out, so it works really well. and obviously we use regulated brokers, but we think you've got a real income opportunity through our mentorship. Without it, some of the brokers tell you how their clients fail. There's 79% of people fail when they open an account. With this particular guy, you know, be part of the 21%. We don't own a broker. We're just a pure educator, and we want people to improve. I'm not here to show you a false fast car or gold watches or anything like that. I'm not a lifestyle seller. All I want to do is promote what ITA is trying to achieve, is an offering of making a processing trading and making you a consistent, profitable trader. So for our recipe of success, we've got to look at the analysis, news, support, indicators, chat, and all that kind of stuff. As I said, many of our traders make between 5, 15%, a bit higher than that, but they are achievable. There's some examples here. Again, we want to see more blues than reds, obviously. And again, recent example trades, as I've shown you too, there are more blues than reds. And again, managing the trades effectively. These come back to April, and again, probably just for your peace of mind, you know, we're not making this stuff up. This is our account history on here, so we know it's still going quite nicely. So, and you must take ownership of your trades, take ownership for your self-education, take ownership to enter the trades, and you know, build a little bit of confidence. And with the right people, hopefully you'll get there. And that's what it's all about, trading. I've done it for 30 years. Trading is, it should be nice and consistent, nice and slow. No need to run around with a head on fire. Just be a consistent, profitable trader. So we think our advantage is we've got 40 odd years of professional trading experience. We are qualified technical analysis, as well as me being fundamentally trained at the investment banks that I've worked at. We don't charge charting fees, software fees. We have a fantastic funded account offer. You've got second to none trader and educator experience. So really treat it as a business. What you deposit, what you pay, then you slowly move up, and the rest of the profit is yourselves. So you can pay $3,000 for 2 days, plenty of places. We're very clear and transparent. We work in partnership with professional traders. We work in partnership with the London Stock Exchange for equity, some equity courses twice a year. And the aim is to build that community of like-minded traders that work together and encourage one another. Don't be isolated. The idea is to work together. So, and again, we place the most importance on your return of investment and the quality of our analysis. So here, just by following some simple structured trading strategies, we get not a great sell signal there, but our trend could have been up. We have a nice buy, sell, buy, sell, buy, sell. It's not that simple, but if you just wanted to follow just those triggers on that particular strategy, you would have made handsomely. But again, as you can see, opportunities come in different shapes and sizes. So we're going to look at the fast track momentum, and it's a strategy where we have a select set of rules we can take advantage of price action each day. It's semi-automated, multi-asset class, multi-functionality, okay, and obviously multi-time frame as well, H1, H4, and the daily. So here, a nice blank chart can look daunting. We can pick some peaks. We can probably see it's in a downtrend. So I want to sell into the downtrend. So by overlaying some strategy rules, we see that's our opportunity. There's an opportunity. Here's our opportunity. So 3 nice selling opportunities. There was probably one back here, but 3 nice selling opportunities in conjunction with what our oscillators are saying. And hopefully this is something you can learn. Trading with the trend will heighten probability of a successful trade. And again, you've probably seen some of that on this particular trade. We're sold here, so it's doing whatever it's doing. Euro, Oz. We bought here. We're in a winning trade. We're just going to run the trend. Our stop is strategically placed below the trend line. So worst case scenario is if I get busted out, I still make, which is good. Okay, so we're seeing a little bit of distraction here, but we still have positive MACD there. Another strategy here we can work on, but really this is the one I wanted to concentrate just for today's session. Even on multi-asset class, we're looking at an index here. We get some nice triggers here. Some nice 1, 2. I didn't put the trend line in there, but again, a close above this long-term moving average should highlight a move up. A close below should highlight down, but obviously that reversed quite quickly. It moves back up. But we're not going to win every trade, as I said. But by following a strategy and the guidelines, this education has helped many thousands of traders during our 3 years that we've been been open. So we could also look at trend trading as well. Michael Cavell, a well-known author, successful trend following podcast. But these strategies have been around for a long time. And here we can utilize technical and fundamental analysis to understand the true nature and structure of the market. So we look at a few things: price action, multi-time frame, chart patterns, nature of the market, and market structure. And chart patterns, as I say, we have a pattern blueprint for our delegates that sign up. And again, we can look at trends, reversal, continuation signals to execute our trades and ideas. We only risk 1% per trade, and it's break-even methodology, and that means we look to get to break-even as soon as possible. We like to look at an impulsive phase and then a corrective phase, and then impulsive. Again, something like a flag or a pennant that you see here. So those kind of patterns are very highly used during technical analysis. And also, we have our blueprint shows many different channels, bearish, bullish, but we're looking for the high probability setups. So for example, here on dollar CAD not recently, a little while ago, we kind of sell, we look at this entry level here, and then we scale in here. But as it's on the hour time frame, the risk to reward and actual realized profit actually on this trade was 21%. You have to be patient. You have to take a little bit of time, but we can show you those strategies, further as you go in. But I'd say not really for the beginner, but remember, it's in our wins, not in our losses. And today we have 2 free opportunities for you. Okay, you can join our free Pro Trader Skype chat for a limited period, and all you have to do is email me at info@intelligenttradingacademy.com, or you could book and you can have a free one-to-one session with myself over Zoom or Skype, whatever you prefer. Will probably be with me, if not it's one of the other traders, so you can see exactly what we're doing. And again, we'll go through all those trades, some of the analysis, just to make sure you're clear of the offering. And then on that occasion, we can go through a bit more what we expect our students to do, and also a bit more about the funded account. We did mention earlier that we send out a daily email. This is the one we sent today. Just goes through what happened overnight. So we give a nice currency heat map, what's weak and what's strong, what's happening in the commodity markets. Obviously, we can trade those, and anything that's happening in the equity markets. Obviously, all is about COVID-19, and hopefully when everybody's going to go back to work. That's what's lots on the news. Last year it was Brexit. This year, unfortunately, it's the virus. But we'll give out a spreadsheet of what we've got on. We talked about sugar, again, multi-asset class, something else to look at. Looking at our rules. This was the chart in sugar. We're seeing a nice breakout here. So I said, we said we issued a trade idea, is a futures contract. But again, just to prove where we are, I don't mind if we're losing or whatever happened. I'm not making any money out of that just yet. Okay, so we just looked at this thing here. So we have broken out that I've got positive momentum. We'll see where that is in the morning. So we're not hard and fast panicky traders. We can take our time. We can let the trades mature and breathe, and that's the best way I've always found to make bank a profit. So it's about learning the process. Successful people, they work hard, they never give up, they have clear visions and goals. Never give yourself goals you cannot reach, okay? Because if you don't reach them, you end up being disappointed. So give yourself a goal, make sure you can reach it. Understand your terrain, so understand the analysis and everything that we're teaching. Aim high, you can achieve anything. You can learn things at new times in your life. Look for that continued progression. I'm still reading books on technical analysis, always interested in other theories, but make sure you do your work behind the scenes. I say Sunday night, I'm looking at the markets, preparing for the week ahead, and then just having a little look in the mornings, each morning when I'll give you an update on Skype and give you an update in the daily email. So, and always strive and improve your game, because that's important. Trading's great because every day is a different day. You get different setups, there's different news, there's different announcements, there's some different moves, there's different opportunities. So we need to prepare ourselves to take advantage of those when they come. So during your education, you'll get to understand and learn how to read the overall picture. And as pro traders, we need to take time to identify areas of support and resistance by looking at the bigger picture. Also, we need to identify what tools we need in our toolbox. And we look at confirmation indicators, oscillators. I'm not going to go into them in too much detail because time's going on. But your main chart with the candlesticks is our template, and then we add our confirmation indicators and oscillators for added strength and color for the trade setup. We use parabolic stop and reverses, great for momentum shifts. We also look at relative vigor. It's based on an average over a 10-day open and close period. We look at standard moving average convergence, divergence, very good again for confirming a shift in momentum, not for overbought and oversold, because the RSI is a nice little indicator for that. So above 70, the RSI shows as overbought, and below 30 technically shows as oversold. So we need to put those in our toolbox, and also we need to be very clear in our thinking process when a trade is setting up. I might see 10, 12 trades setting up, but might only take 2, because I go back, I'm looking for those higher probability trades. Okay, are you trading with a trend? Look for support and resistance. Is there any moving average interaction? Does the RSI indicate anything? Where's momentum? And look at other oscillators. Is there any immediate news and events out? So very important. Like last night, the dollar was moving up and down because obviously we had we've got a governor talking about interest rates and about the market. The equity markets came down lower on the back of disappointing the growth. We all know because of this and the world shut down that growth is going to be benign for a little while, and that's going to allow. We're just going to have to play the markets, and the markets may take some time to recover. If you look at Nasdaq, that's been that's near on the weekly chart. I'll just prove that to you. If we look at Nasdaq here on the weekly, bear with me 1 second. Again, a nice rally today. We're actually near its highs. This is COVID-19 when it happened, okay, and here we're just coming off, 300-400 points away from the highs. It's not a bad recovery, okay. And if I say, look at how important this level was here, here, and here. It tried to break, it failed, off it went. What you can say is every time it touched that yellow line, we got a new high. It touched that yellow line, it got a new high. It touched that yellow line, we haven't got a new high yet. Bet your bottom dollar we do sometime in the next few months. Because with interest rates being at 0%, low in the market, low around the world, equities still offer a dividend yield. They still offer a rate of return. For an investment manager, what are you looking for? You're looking for a rate of return. So hence to say, even from the financial crisis 07-08, we saw equity markets go up because quantitative easing, the governments were buying all the bad debt. The money had to go somewhere. They were pumping it into equities because they still had dividend yields. Yes, we'll see lower share buybacks and you'll see some dividend cuts, but it's still higher yielding than what it is sitting in the bank. So that's what creates and fuels the equity markets continuing a solid recovery at the moment. Okay, so commit to your trading plan and professional trader support for your continued development. We're also looking at moving averages, and moving averages are good for support and resistance, identifying trends and reversals. Again, this is the Nasdaq we talked about on the weekly chart, how important that was. Okay, and if we said the third principle of technical analysis was history repeats itself. So if it's touched there and gone to a new high, touched there, gone to a new high, touched there, gone to where, you would go with a new high, especially as the momentum is now turning over and it's coming out of oversold from the RSI. So the bigger picture is always helpful. Same on the Dow, the tail, the spike, there's no close below, always supported, looks quite nice. So we're looking for a trend and support and resistance, and we can play that by inputting our manual trend lines. We want 3 credible touches, which we have here, here, here. That's a bit steep, not really keen on that one. But here, still a nice trend line, 3 touches have broken there and up it went. So, and our programs, what do our clients say? We're just going to wrap up now for the last few minutes. I mean, they are testimonials that most people like us who work with us. Hopefully, you will get the opportunity to work with us as well. Our recently closed trades here. Again, we offer weekday coaching sessions. We could do those remotely. It's very easy and very clear on Zoom or Skype. We can share screens, we can get you set up and everything you want. Very much trying to create a community of traders that's global. And we have the Munich office, hopefully soon to be working with some people in Australia as well. But providing clear and transparent analysis, clear and transparent will give you some confidence to move forward. So I hope you like that. Obviously, we have weekday training webinars and podcasts. They get dropped into our VIP Skype chat. And also, when we do, if I do a weekly session, you can ask for any trade adjustments to be done during that as well. So we do many things, many live sessions as well as that. And you always have the opportunity to contact us 24/7 with any questions. You can even share your analysis, and I'll come back to you. Typically on the first Saturday of each month, we invite all our traders into an in-house workshop. If not, we will create a webinar to do that. It's not a problem. And our aim is for our trading community to get together regularly and meet face to face. I appreciate if you're overseas, that's not a viable option, but we would hold a webinar for all those clients that can't make it to that particular session. We will record that session and give it out to you anyway, so you can listen to it at your own time. And obviously a Q&A is a valuable tool, but as you're talking to us all the time, it's very important that you get communication both ways. So we're offering all this kind of education. We're backing our education with the funded account, real opportunity to make some money. So we're giving you trader email correspondence, individual assessment, working at your own pace to meet your own needs and requirements. Okay, that's really important. I say if you need anything from us, again, we're offering you 2 free opportunities to find out a little bit more about us. You can join our free Pro Trader Skype chat, and you can book in a free 30-minute remote session with any of us at ITA. The email is info@intelligenttradingacademy.com. So happy for you, anybody, to receive anything from that. And again, our benefits are we're very qualified. We know our craft. We understand what we're doing. You know, I've been in the industry for 30 years. The reason I wanted to set up Intelligent Trading Academy was to get away from all these social media people showing you flashcards, how good their life is, and all that stuff is. If you put nothing free will work. So if you put a bit of work in yourself, you will reap the rewards without doubt. And if you talk to us and communicate with us on a regular basis, you will expedite your learning and your trading opportunities with us. Okay, so say do have a fantastic funded account offer, but really, again, one of the biggest assets to us is our kind of Skype group here, which we can get up and quickly show you. Okay, in our trader here, we're looking at many trades. All the traders are talking. They're all talking to each other and messaging each other. Okay, again, we're talking about what trades we've got on and things like that. Here, we've nice put a trade on. Somebody else spotted this, so we've got a nice long opportunity. We've got a trade update. We move our stock further into profit, proactively trade managing, and everything like that will go there during the day. EuroCAD, can you see? We put that trade on today. So just before I leave you, I shall show you where we are on the trade in EuroCAD today. How are we doing in EuroCAD? Let's have a quick look. Okay, that's on the weekly. We go in on the H4. Thank you very much. Okay, because we've got all this area here. The trend is now broken. Our momentum is now turning negative. We're in at a good level. We could actually move that down to entry if we wanted to. But I think it will come back down to the kind of 150, 110 level. That's where we'll make a discretionary buyback and bank our cash on that particular one. So we're just wrapping up. Now, and what we're going to be doing. Hopefully, all we ask is you partner with us, learn with us, build your profits with us, and earn with us, and take advantage of our great session offer that we have for you today. So you can join our free Pro Trader Skype chat, booking a free 30-minute session with yours truly. I very much enjoyed talking and speaking. I thank very much for the opportunity. So please take up your free offers. Just email me at info@intelligenttradingacademy.com, and I'll get you set up and send you the right links for you and all that stuff. So this is where we are. We're based in London. That's our head office. We have a nice setup there. So please join us, and I very much look forward to speaking and working with you very, very soon. I think my time's up, so I'll hand you back now. And if anyone's got any questions, I'll be more than happy to answer them.